What is up, everyone? AB is back. Spencer will be joining me shortly. It's Tuesday, and it looked like right when we opened, maybe we were back. Maybe everything was okay. Since then, Wall Street said, not so fast, not so quick. And we have since sold off. We'll do some checkups on the overall market. But again, I mean, that's your just biggest headline, kind of 30 seconds or less. All you need to know so far of the day is the S&P 500 opened up about 1.5%, quickly gave those gains up. So the story today has been the same story the past couple weeks. Sell those rips. Don't try to get in there and buy any dips and call any bottoms. And that's the bottom line. And we're going to get David Green on here in a minute too, who he's got some thoughts and everything going on, and he's been trading a lot longer than I have. So I'm excited to talk to David. He's, always important to talk to people who have seen some of these market cycles before and kind of know how to navigate them, right? And they know you talk to any of them, and they all say the same thing, right? They're saying you don't got to try to be a hero and go out there and time a bottom. I mean, there's so many times over the last month, 2 months, 3 months where I've thought personally, like, oh, if I had a bunch of money, here's where I'd throw some in. And if I just held, sure, I'd be fine over time, but I'd be down right now. And no, that's not the goal, to be down. So we'll get David on here in a minute. After David, we will have Zaheer Anwari, who's a market strategist and economist from England, and that'll be interesting because we're going to talk to him about what's going on with the euro, the US dollar. That will be at around 12:15. And then options Mike, 12:45. Talk to options Mike. We'll have Direxion on after that with some more options on how you can kind of hedge the market right now with some inverse ETFs. So should be a great show today. Excited to be back. Please smash the like if you have not already. Maybe that'll get some positive vibes out there, get the market going again. But without further ado, let's get the show rolling and bring David Green on.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. Alrighty, without further ado, let's bring the man himself from Florida, David Green.
a legend in his own mind.
My mind, he's a legend in my mind too.
What's up,
David,
Hello, everybody? How's everybody doing today?
How are you doing today? How was how's your trading been since last time we saw you last Tuesday?
Very good. Knock on wood.
Knock on wood. All right.
It has been a trader's market, certainly not an investor's market.
That is the truth.
Not lately, anyway. I mean, today is just like backbreaking to anyone who was a bull, right? We finally got a little bit of good news this morning, and we were rallying a bit, and God, we just gave that all back and then some. I think.
And what was the good news?
CPI tomorrow, right? We got CPI tomorrow. That's going to be the next beat all end all number is the CPI. So we'll see what happens with that. What do you want to talk about? I mean, I think we're close to a short-term bottom. I was hoping that today, the worst thing that could have happened today is what did. We opened up a little bit and we lost all that. I was hoping that today we could have got another big follow-through day down, and then that would have been a short-term bottom, and we would have been up from there. I think we're getting close. I'll show you guys my monthly chart of the SPY, okay? And I've been out of this market for a very long time. I got in a tiny yesterday, and I will start being an investor again. Very, very small. And again, guys, I don't give financial advice to anybody. If the spiders hit 390, that's about a 17% pullback from the highs. So I will start slowly getting into the well, listen, Christian, everybody has their opinion. I'm just telling you what I'm looking at, right? I will start getting into the market at 390 in the spiders. I'm not saying that that's the bottom. I'll show you a couple other charts. Okay. My weekly chart We have a level down at 360. Now, look, these levels, everybody's coming out now and this hasn't even started, and we're just at the beginning of this. And 2 months ago, when the market was making all-time highs, you didn't hear from anybody.
I know.
Whatever it was, right, Aaron? I mean,
it's so easy, right, to be the biggest bear out there when the markets are looking like this. I mean, and I get it, and a lot of them, even people that were very bearish, say 10% ago on the SPYs, ended up being right. We've dropped here, but the question is going to be, where do we bounce from, or are we just going to keep free falling?
And nobody knows the answer to that. And anybody who thinks they knows the answer to that is, pardon my language, full of shit. Okay, the market's going to stop going down when it stops going down. That's the bottom line. So I can only go by my technicals, right? So my technicals telling me 391 is my first spot. I'm going to start buying into this market. 361 is my second spot, and then 335. And if we ever get to 335, I'll be fully invested for long term again. Okay. This is not going to last forever. Eventually, we're going to get resolution in Russia, and we're going to be fine again. I do think this is going to take a little longer than it has in the past. This isn't a COVID event where I think we're going to, 6 months later, we're going to make new highs in the market. Unless, we get something really, really good out of Russia. I don't even think the CPI matters that much tomorrow. Interest rates are off the table as far as I'm concerned now. They talked about what they're going to do. We know what's going to happen with interest rates. Matter of fact, when we got that decision, what did the market do? Right? I think that was the day we were up 900 or 1,000 points, and we actually
and then the next day we gave it all up, and I still don't really understand why the market had that reaction where it was up 3% after 2 p.m. on the news, and then literally the next day gave that all up and more. So just some wackadoodle moves, but from what you were saying, David, just on the market's going to come around when it comes around, whether that's at 390 or whether that's at 350 or 335, wherever it is. Who knows? If anyone's out there telling you the market is going to continue to drop by this amount, or this is when the market's going to bottom, like David said, they're full of shit. They don't know exactly when that's going to happen. They don't have a crystal ball. People make predictions. And then the best investors make money off, when they're right. But what David's saying about things aren't, that bad. I'm more in that camp. I don't think this is 07, 08. I could be wrong, but I don't think we're in that environment. I mean, think about what's going on right now. From a macro perspective, we talked about Russia, Ukraine. China right now is like completely locked down with COVID. If you had to ask me 6 months from now, is China still completely locked down, or are we a little bit better? I'd say we're probably a little bit better. I don't think that was not the consensus 6 months ago, that we'd be in this spot right now, that we'd be in the middle, that there'd be a war going on in Europe, that China would be locked back down with COVID. These things are unforeseen headwinds, and I think that's all it is. I don't think it's
I agree with you 100%, Aaron. And like I said, the market is always forward-looking, and the only thing we can't take is uncertainty. The reason that we rallied so much when the Fed came out is because they told us what we're going to do. Then reality set back in, and what's going on in the market and Russia and inflation and everything else, and we've given it all back. So,
but you think it's really just that at the time, 2 p.m., we got the news. Okay, it's what we expected. That's good news. And then after that 2-hour rally, Wall Street realized, oh, we're still raising interest rates. This still isn't a great environment for growth, and then sold it all off.
Yeah, and usually the day after the Fed is when you get the real move in the market. If you go back and look, we get the big knee jerk the day it comes out, and then usually the next day is when we get the real move. So meanwhile, we're sitting here, and the spiders just had a nice market just had a nice 300-point rip to the upside. We're trading, where are we? 399 right now, guys. Anything setting up on the short side? Nothing but manipulation today. Let's talk about that too, because you can say this market's being manipulated every day, but there's actually people in here that are trading this market, and institutions, and there are a lot of algorithms. But one of the beautiful things about technical analysis is that I don't care what the market does, who's buying it, who's selling it. I'm just looking for trades to set up based on my technical analysis. For those of you just joining us, we are in my private trading room. We're short-term traders. We do some swing trading. We do some options trading, and we do some. We don't do any investing, so we're here to trade. So that's what we like to talk about. We like to talk about trading. We had a bunch of good trades that set up today. Good thing about trading is there's good trades that set up every day. You just got to be patient, disciplined, and look for them to set up. Some of these stocks we were looking at, right? SoFi, their earnings leaked. Is that why it's halted right now?
Really?
Yeah.
I feel like every time you come on, David, there's some news with SoFi.
Yeah, I think it's halted because their earnings leaked out. Yeah, down $1.10. So this is going to be a spot I'm going to get back into SoFi. If it goes down from here, and we've been out of it, and we haven't gotten back into it. But again, this will be long term. Let's see what happens after this. They halt it. Maybe it'll be $3 or $2. But I think it's time to start buying a little bit of this back again. What's up, MD? What do I think about NVIDIA? All right, I'll give you my overall view about if I'm going to start buying the market when we get to 391 down to 360, I'm going to start buying some stocks also. Okay. And again, we don't give financial advice. My number one on the list will be Apple. Apple is always my number one on the list. It's going to be the first stock that I go to. We have a level on a weekly chart, I believe, guys, at about 149. So I would like to get back in. I've owned Apple for many, many years, and I sell it and I buy it. We have 149 as a weekly. We have 129 as a monthly. So a couple of spots I'll be looking to get into Apple. NVIDIA, I'm probably going to stay away from. I think they have earnings coming out in a couple of weeks. So I don't think that's something I want to get involved in.
Is my mic on here? Can you all hear me?
Yes.
All right. What's up? All right. So, sorry. I'm a little bit late today. I apologize. SoFi, their earnings just leaked.
Correct.
Is that what I understand? I was
yes.
on call. I saw that. And we're at $4. Is that right?
We're at $4.87 to be exact.
Holy moly!
Yeah.
Wow.
So I was just telling Aaron, after this gets re-released, we'll probably buy a little bit to hold on to from here. We'll see what happens. Probably good risk reward down here, I would say.
My whole time when people were when SoFi was soaring and it was $20 a share and people loved it. My whole thing was I don't know a single person that actually uses SoFi.
I thought a lot of young millennials use it. It's like
I know, and that's why you would think I know more people that use Venmo as their bank than I do SoFi.
You know one person.
That's more than I do that I know SoFi.
How about UPST today, guys? This is another stock that we've talked about a lot of these. UPST, Affirm, Doku, these stocks that don't have any earnings that have just been absolutely decimated on their latest earnings reports, right?
Oh, I did not even see Upstart. Down 60%?
Yep.
Disaster.
Check that out, man. 59%.
Holy cow.
Yeah.
Check,
So this
check.
set up
There
for
we
a
go.
beautiful,
That's better.
it actually set up for a beautiful trade for us today.
This was a $400 stock
Yes.
a year
I'll
ago.
show you on a monthly. $401.
Yep, that's better.
Right?
Thanks. Thank you, Aaron.
I think
All right.
IPO day, it was like 22 at the low. That could be a spot to look to if we get back to $22. Kind of like that. Spence, your mic's still not working there, saying.
I know. Can I hear myself loud and clear through my own headphones.
I think it's working now.
Now it's
I hear you too.
All right, that's good. If it's not working, let me know. The crazy thing about Upstart is heading into today, the stock was down 80% from its all-time high.
Isn't that crazy?
And now it's down and if you thought, oh, it's down 80%, how much more can it fall? Well, it just fell by half again.
That's right.
So,
Well, that's like the other day when we were down 5% on the Qs in a day or close to it.
Yep.
So someone on Twitter was like, well, if it makes you guys feel any better, mathematically, we could go down 5% every single day.
but
Yeah, technically you can.
and hey, 5% every day
In 20 days.
is a smaller and smaller number every day.
Right.
Right.
So once you're down to 10 cents, that 5%
It's
hurts a little bit less.
It's nothing.
hurts a little bit less.
Yeah. Oh man, what a disaster. All right. So wait, hold on a second. I apologize. So the SoFi report leaked, but what did it say? Does it matter?
I don't know. I don't know. It's of course it's not going to matter. The only thing that's going to matter is what the stock does when it opens.
Yeah, it doesn't matter. Hey,
I think Biden's speaking right now, guys.
man, I gotta say, I'm still not feeling like we're at capitulation, like that this is the end.
No, we're not. If we would have, after yesterday's close, Spence, if we would have opened down huge today, right?
And
had that big giant follow through down day again today, then I think at least it would have been a tradable bottom. I don't know about a bottom, right? But I think it would have been a tradable bottom. We got the CPI tomorrow. God knows what's going to happen with that.
It's going to be a doozy.
Yeah, I mean, that could be the excuse to maybe give us that capitulation to the downside, short term anyway, right?
It's just so interesting, though, and I think we're going to talk about more with our next guest. But like, you look at the bond yields, like continue, like everyone. It seems like the market stocks are pricing in a recession, but the bonds and like the Forex curves are not really.
Yeah, I mean, look, any recession, again, my personal opinion, any recession that we have, I don't think is going to be the one that's going to stay with us very long. I just don't. You
know what's interesting is the last major recession / crash that we had was obviously March 2020, and it happened so quick. But I vividly remember people got, and obviously it was the start of a much larger bubble, but people were so excited to come in and buy the dip in March of 2020, in April 2020. They just, and I was like, not.
Well, wasn't that COVID also? February?
Right. So that was COVID, right? So I was not in that group, but I remember like just like the sentiment out there was like, oh, everything is so cheap, let's buy it all. We're gonna go back to all-time highs, and that ended up my mic just died. That ended up being correct, but I'm not seeing that same kind of buy the dip mentality now.
That's the story looking back on it, Spencer. But we didn't see it was from basically the end of February, beginning of March till mid-March, there was like no buying. It wasn't until we had a fuller picture of what the Fed was going to do that really people started coming in and buying and
getting over the initial COVID shock also.
Yeah. Right. I just like I guess like my own personal indicator will be when my friends start texting me like what stocks to buy. Which hasn't happened yet.
Well, here, David. So is that the RSI on the bottom of the screen here? You can see, was it lower there in March than it was where we're at right now?
Yeah, 10 points lower. So, and again, this was to me and I said it when it was happening. That was a generational buying opportunity. There was a lot of things that caused that. Mostly it was COVID and a few other things going on. I don't feel that way right now in any way, shape, or form.
So the one thing during that market that kind of, and looking back on it, it matched up perfectly, was you could look at the outflow of the equities markets. How much was being sold each day was increasing each day. So on March 5th, it was 100 million, say. Then on March 6th, it was 120 million. And the first day that number, it's not like it was a buy imbalance and flipped. It was just the first day that number, it was sold less than it was yesterday. So one day it was, the day before, $500 million, say, sold out of the market. Instead, that day it was 450. So I think now if we could look at that data and see, are people selling more today than they were yesterday? If so, that's pretty bearish. If not, who knows? Maybe people are starting to like some of these valuations a little bit better.
I like Vicron. I'm not selling. Guys, if your time frame is 5, 10, 15, 20 years, you should be buying, not selling. We know that.
Right.
Okay.
But the catch is you can't be buying some of these moonshots. Like you really can't be buying
if they don't have earnings and balance sheets, just stay away. That's the bottom line.
Peloton's not a bad example. Any company whose key financial metrics, whether it's earnings, whether it's EBITDA, free cash flow, whatever, margins, whatever, if it's going in the wrong direction, you don't want to buy it.
That's right.
right? Buy the healthy businesses. Like here's an example. Okay, I was looking at Beyond Meat today. Beyond Meat reports earnings, I think on tomorrow or Thursday. I forget when. One of these days. Beyond Meat reports. Right. This is a growth company. Right. It was built as it traded like a growth stock. It's a growth company. This company's earnings and operating income and all that jazz going the wrong way, going down, getting wider. Losses are widening. That's not what you want to see for a growth stock. So when they report earnings, whether tomorrow or Thursday, I almost don't even care what they say, because they've already kind of told us in a way with their last few quarters. So don't be buying like a Beyond Meat, right? Buy like a company that's like integral to society, like Google,
buy AMD,
perhaps.
buy Apple, buy Nvidia,
Yeah.
buy Google, buy Microsoft, buy Amazon.
Yeah,
real stocks with real earnings and real growth rates. Albeit it's going down.
The consensus on the chips is that short term is definitely very hazy, but long term, the thesis is very much still there for AMD, Nvidia, etc.
AMD just had their earnings; they were spectacular, right?
Yeah,
it's still going to get hurt when the market goes down.
Right,
it's going
exactly.
To. But those are going to be the first ones that turn when the market goes up.
Exactly. It's not going to be.
You don't have to worry about them having earnings one day and getting cut by 50%. It's not going to happen with those companies.
Right.
So what happened? You guys are in Myrna. Hold on one sec, guys. Give me a minute.
By the way, did anybody join me last night in the AMC earnings call stream? I watched that all the way through. AMC CEO Adam Aaron, the one comment that jumped out to me last night, you know what he said? He called the Top Gun sequel, which is coming out, I guess, soon. I don't know when. A cinematic masterpiece. It's a cinematic Top Gun Maverick.
Tom Cruise is still doing all of his own stunts.
When does Top Gun Maverick come out?
It comes soon, out. I think July.
I don't know when it comes out. May 27th. All right, he called it a cinematic masterpiece.
I kid you not. There's a scene. I think it's in a recent. It might be either a Top Gun or a Mission Impossible or something, where Tom Cruise is they're like jumping out of a plane, parachuting.
Oh yeah,
and
I've seen that.
Wrestling. And I watched a behind the scenes YouTube video on the filming of that.
Yeah.
It's real. He's like a, I don't know, however old he is, 50-year-old guy jumping out of planes,
he's older
wrestling.
than that.
Nah, he's like 59, something like that. 58.
Yeah, he's 50. He's almost 60.
Crazy.
Anyway,
crazy.
The AMC call was really nothing to write home about.
You guys know how I feel about AMC. I have 8 puts for this week. I'm hoping to cash in. We're at 1160 right now.
Like here's an example. So like Rivian, right? Because Rivian reports earnings tonight, I think. Why buy Rivian now? Why do you have to buy it now? Is my question on Rivian. It's a moonshot.
Here's the gig, right?
You're gonna buy it.
Well, where are you gonna buy this thing? It's $21, right? So if the earnings come out bad, what's gonna happen? It's gonna go to 10. It's gonna go to 5. It's gonna go out of business. There's no way to buy it. There's no way to ever buy this thing now. I mean, look at the earnings. Lost $12 2 quarters ago. Lost $2.43 last quarter. This is down from $180. It's trading at 20, right? Where do you ever buy this? I don't know. 5, 4.
Well, yeah. So one of the chats asked about Upstart, because Upstart does make money. Like they have positive earnings. Okay. So there are reasons not to hate that stock.
I agree.
Unfortunately for them, they're caught up in everything growth must go. It's no fault of their own. Well, that's the way it goes sometimes. Also, their guidance was bad. Okay? Let's not discount that. Their guidance was bad. They gave guidance for the year and for the current quarter that was below estimates. You can't come in below estimates now, of all times.
Nope.
Now?
Well, I think we also have to think about just what Upstart does, and unlike some other shows out there, we actually know what Upstart does. They do personal loans.
They're the technology behind the personal loans, right? It's like their customers are not the end borrowers.
So look,
it's the providers.
this is something that if we get a
thought.
couple more days down, I'd take a shot and buy some and put it away.
Either way, I mean, if the risk appetite for everything is dwindling across the board, that's going to include the risk appetite for people to take out personal loans, whether
Okay.
that's to.
How about this being a possible takeover at some point then?
Oh, easily, yeah.
You know what I mean?
Well,
I mean, if the
yeah.
stock gets to 20, 50, $20, $15, it's very easy for someone to scoop them up, and it's not going to cost them a lot of money,
No,
especially
no.
if they make money, right?
And they do make money. Someone in the chat is asking about Blackberry. This is a stock that I got talked into buying in the fall of 2020. And then it became a meme stock. So I sold it.
Well,
And
at least you sold it.
the bull thesis on Blackberry that talked me into it was
What's the symbol?
BB. Is that they are going to become the technological infrastructure for cars, right? For everything connected cars, all the computers and cars is going to be run on BlackBerry software, or BlackBerry hardware. That was the thesis, and I was like, all right, that sounds cool. I'll take a swing at that. Then it became a meme stock, and then all that went out the window. Can it still go higher? Sure, but again, this is the kind of environment we're in where you're just gonna have to kind of wait. I'm sorry, but that's the reality.
Well, I remember when this was RIM when it used to trade, and I think they had the same story back then when the stock was $200 or $180 or whatever the heck it was.
Yep,
it was the same story back then. So I don't know. Didn't Apple kind of just eat their lunch and put them out of business, basically?
Potentially. I mean, yeah, that's what happens, right?
Samsung, Apple. But again, this is, you know what? This is a lottery ticket now, Spence. It's an option.
Sure. There are lots of stocks that I think, oh, that's kind of a cool idea. I can be down with that. But like, I'm not gonna. The difference is I'm not gonna buy it now, right? That's the difference. Is I'm not gonna buy. If I haven't already bought it, I'm not buying it now. Like an example is like Weejo. I've interviewed Weejo before. All right, it sounds like a cool idea, but I'm not gonna buy a stock at all-time lows. I'm just not. So okay, I'll wait. And if I have to wait a few years, so be it. And if I don't get the bottom, that's fine. I'm not trying to call a bottom. Josh Brown said this, I think, yesterday. You don't get style points in a recession. Don't be a hero. Nobody cares if you nail the bottom. Okay? That's more luck than anything.
No question about it. Look, what do you think? What do you think? I mean, Josh Brown runs money, right? I'm pretty sure he runs money, right?
Yeah, yes, it is.
All these people that come on TV run money.
Yep.
Okay.
Yep.
So the last thing they can do is come on and panic people. They can't do that, right?
Well, right. And him specifically, you know, he runs a RIA. Their job is to make it so that their clients don't panic. That's their job. Their job is to be calm. Their job is to tell their clients, stick to the plan that we have. You're diversified, et cetera, et cetera, et cetera. Don't sell unless you need to. But their job is to be calm in stormy waters. That is the job of a financial advisor.
Yeah,
so
exactly. And you know, I have my buddy who's at Wells Fargo who I've been with for 30 years, and you know, they get phone calls all day from people. And again, it depends on your age, depends on your situation. But if you look back at any time any of the events have happened for 100 years, they've worked out okay in the end.
That's the thing. That's the thing, right? And hey, maybe we're entering another 2000s, right? 2000s was a lost decade. If you bought the top in 2000, you basically by 2010 you broke even, right? It's a lost decade for stocks.
Yep.
That happens sometimes, unfortunately.
Absolutely. I don't me personally, I think we're in a different environment right now. I think that they have thrown and are throwing so much crap at this market right now. It's just hard to imagine us getting any traction until some of this gets straightened out. And that's what we're seeing. You know, that's what we're seeing right now.
Yeah. Yeah.
Look.
All right. I'm being told that Joe Biden is speaking right
Yes.
now, so we are streaming that speech on our YouTube channel.
All good.
You wanna
Only
check
thing
it
I
out?
want to say, Spence, is tomorrow night we have another free webinar for everybody. Go to Wall Street Global Trading Academy. Sign up. We're going to hang out for a couple of hours and talk about trading and everything else.
All right, I'll put the link up on the screen. WSGT. Let me find that darn link. Where'd you go?
Free for everybody, guys, and anybody who comes
never.
in will get a week to hang out in my trading room and watch us trade.
There it is. If my computer decides to function for me, which is not. There it is. WSGT.com. There's a link up on the screen. Check it out. David, always appreciate hearing from you. Obviously,
My pleasure.
yeah, obviously it's tough out there, but if you're able to short, if you're able to bet against things, if you're able to buy puts or buy inverse leverage ETFs or whatever, now is a good time to do that. So, all right, have a good one, David.
Thank you, Spence. See everybody next week.
All right. 12:02. Here is the rundown of the day. We'll have to keep an eye on things while Mr. Biden is speaking, but we're going to hear from Zaheer Anwari in, what is that, about 13 or so minutes. We'll have Options Mike on the show at 12:45. We'll have Dave Mazza from Direxion at 1:15, and that will be the show. So, I'm almost should I just like bring up the Biden thing? Should we just watch it together?
I'm down.
You're down? Yeah. All right. Because I see we're streaming it here. Let's see if I can get this up on the screen right now. Then we could just do some Benzinga streamception. Watch a Benzinga stream on a Benzinga stream. Let's see if this works. I don't know if actually I can't do it from here. Producers Aaron and Rohan, can you please share the Joe Biden stream on screen from this studio, please? And because I can't do it on my laptop. At least
you guys talk
I don't think I can.
Lunatera on pre-market prep this morning?
No, is that what Pfizer's bought? No. What? No. What?
Terra Luna?
Oh no, I wanted to talk about that. Yeah, so turns out what? Stable coins aren't so stable? Is that what I'm gathering here?
Excuse me. Yeah, basically, looking into the white paper, kind of the behind the scenes of the Terra Luna Tether project UST, a lot of it was dependent on the volume increasing, kind of, as time goes on. They were expecting the volume to increase, and the idea of it was kind of predicated on that. So over the last couple months, we've seen a kind of dip in the crypto market. Some interest has waned. And I guess less people were buying Tether and UST than before. And that caused a strain on the way that it's supposed to maintain its value.
It's supposed to be pegged to the dollar, right?
Yeah.
And it went down to 95 cents.
Mm-hmm.
Not so good.
And then once that happened, that scared more people from it, which caused it to drop even further, all the way down to like 81 cents.
All right, we've got Biden up here. Let's watch this together. Oh, I can't hear.
Also, yeah, Aaron and Rohan.
And I agree with what Chairman Powell said last week, that the number one threat is
I don't know.
strength.
Someone moved it.
And that strength
I
that we built
can't hear
is
on you. You may
inflation.
have to share the computer sound.
So the Fed should do its job, and it will do its job.
I'm not, if you all can hear it in the chat, holler.
Now,
whatever he's saying, the market
as
likes
I said
it.
when I came
Does it?
Yeah.
To what Congress and the President can do to fight inflation, Americans have two potential paths forward. The first is my plan, the Democratic plan.
Here, maybe I should.
Plan
All right,
put
so yeah,
forward by
they can hear it.
Republicans
I,
is the second
but
alternative.
we can't.
Here's
which is
how
sad.
each of us would take.
So I'll bring it up
tackle
on
inflation.
my own thing.
My plan is to lower everyday costs for hardworking Americans, and lower the deficit by asking large corporations and the wealthiest Americans to not
And then I
engage
also
in
have to
price
keep an eye on the
gouging
SPY,
and to
right?
pay their fair share in taxes.
Let's do this.
The Republican plan is to increase taxes on the middle-class families, let billionaires and large companies off the hook as they raise prices and reap profits at record amounts. And it's really that simple. But let me explain why this choice is so important. Let me start with the Putin price hike, high
Drink.
gas prices, and energy prices. My plan is already in motion. I led the world and other countries to join.
Whoa, had a bit of an audio blowout there.
Release of
It's
oil
okay.
from our stockpiles of all the countries in history. 240 million barrels to boost global supply. Here at home, U.S. oil and gas production is approaching record levels. In fact, we produced more oil domestically in my first year in office than my predecessor did in his first year. To further drive down prices, my administration is allowing the sale of gasoline using homegrown biofuels this summer, which wasn't allowed before. And to reduce our dependence on foreign oil and reckless autocrats like Putin, I'm working with Congress to pass landmark investments to help build a clean energy future as well. From tax credits for businesses to produce renewable energy, to tax credits for families to make their homes more energy efficient. I met with nearly a dozen CEOs of America's largest utility companies. And they, to a person, told me that, and then including Southern Company, American Electric Power, and 10 others, they confirm that if we pass the investments I'm talking about, we'll immediately lower families' utility bills by as much as $500 a year, according to their one estimate. That's by what they're going to make their homes more secure in terms of heat not getting out and air conditioning not escaping because they have good insulation. Now, what's the Congressional Republican plan with respect to energy? First of all, their plan is to give oil companies a free pass. For example, right now, oil companies are sitting on 9,000 unused leases, oil leases, which are the property of the federal government, on the property of the federal government. Under my plan, they would have to pay taxes, and if they don't use those leases to produce more oil, they just can't sit on it. Unlike under the Republican plan, they'd be allowed to continue to sit on this land without producing while shipping record profits back to their investors. The fact is, the average cost of a barrel of oil has been steady for weeks. So why do gas prices keep going up so high? Republicans have offered plenty of blame, but not a single solution to actually bring down the energy prices. You know, we have no plan. They have no plan to bring down energy prices today. No plan to get us to a cleaner, energy independent future tomorrow. So in the future, American families are no longer subject to the whims of dictators halfway around the world. The next thing is, let's compare our plans when it comes to lowering everyday cost. My plan is to make concrete, common sense steps to bring down the biggest expenses that families are facing. Let's take drug prices. My plan will let Medicare negotiate prices for prescription drugs, like they do with the Department of with the military, as it relates to what the administration is able to negotiate for prices for military. The cap, and I also call for a cap on the price of insulin, which 200,000 American children rely on because they have type 2 diabetes at $35 a month. Costs $10 to make the insulin. They make a significant profit instead of the average price of about $640 a month. Think of the difference it will make in millions of American families, like the family I met with in Virginia about 3 weeks ago, struggling every day, every single month to afford their son's insulin. On this and other issues, I've laid out specific proposals to Congress to bring down the cost of everyday cost many American families face. And that's in addition to the work my administration has already done to lower prices. Another reason why prices are up for products people need relates to whether or not the manufacturer has access to all the materials they need to build a product. Think of the materials you need to build a house. If you can't get the materials from the ship to shore, from the shore to the home, the prices are going to go up. That's why we brought labor and industry together on the West Coast to improve operations at the ports, to speed up the transfer of products from abroad to shore, from shore to the location where they're going to be used, so that those products can move more quickly and cheaply. We haven't had enough truckers, for example, to deliver the lumber or other goods. That's why we are executing a plan to get more truckers on the job. It reduces the time it takes to move the goods quickly. Another problem we face is in some industries, there isn't enough competition. And I've often said that capitalism without competition isn't capitalism, it's exploitation. So we're promoting competition for everything from internet services to meat processing. We basically have 4 meat processors in the whole country. They process the meat that goes into the hamburgers you buy. So they set the price. When there's no competition, they can set the price higher and higher. So we're helping smaller companies get into the game to compete and help bring down the overall prices. The bottom line is easing these bottlenecks and making our supply chains more secure is a major focus of my economic strategy. So things move more quickly. Prices go down, not up. You know, some parts of my plan I've been able to get done on my own. I mean, just without congressional approval. Some parts are being held up by Congress. But all of my plan is focused on lowering costs for the average family in America, to give them just a little bit of breathing room. Now, what's the Congressional Republican plan? They don't want to solve inflation by lowering your costs. They want to solve it by raising your taxes and lowering your income. I happen to think it's a good thing when American families have a little more money in their pockets at the end of the month. But the Republicans in Congress don't seem to think so. Their plan has actually made going to make working families poorer. You don't have to take my word for it. It's in writing. They've made their intentions perfectly clear. Senator Rick Scott, Wisconsin, a member of the Senate Republican leadership, laid it all out in a plan. It's the ultra MAGA agenda. Their plan is to raise taxes on 75 million American families, over 95% of whom make less than $100,000 a year total income. The average tax increase would be about $1,500 per family. They've got it backwards in my view. I proposed a minimum tax for billionaires. In recent years, the average billionaire has paid about 8% in federal taxes. Congressional Republicans have proposed increasing taxes on teachers and firefighters. 55% of the largest corporations paid net zero in federal taxes in 2020 on $40 million profits. It just isn't right. That's why I proposed a minimum tax for corporations. Their plan would also raise taxes on 82% of small business owners making less than $50,000 a year. But it would do nothing to help to hold big corporations and companies accountable. Think about it. Republicans in Congress are so deeply committed to protecting big corporations and CEOs that they'd rather see taxes on working American families and try to depress their wages to take on inflation. Never mind the fact that many of these companies are recording record profit margins, even as they raise prices record amounts. Look, you've heard me say it before, I'm a capitalist. I'm not out to punish anybody. I have no problem with companies getting and generating reasonable profits. But in this moment of peril, with the war overseas and inflation surging around the world, the last thing we should be thinking about is rewarding companies for exploiting the situation. While families struggle to pay their bills, some corporate executives are on earnings calls with investors on Wall Street cheering their record profits and explain how they're using this period of inflation to cover the rise in prices far beyond what they need to do to cover their costs. And all this time, they're not even paying for a fair share of taxes in the first place. You want to bring down inflation? Let's make sure the wealthiest corporations pay their fair share. My plan asks those companies to pay their fair share in taxes. Congressional Republican plan, let them off scot-free. And if you weren't extreme enough in the Congressional Republican agenda, they put it in writing. It also calls on Congress to put Social Security, Medicare, and Medicaid on the chopping block every 5 years. Now, if I hadn't seen it in writing, I think somebody's making this up. But their proposal is every 5 years, all those programs would cease unless they're re-voted. That the Congress comes along and says, yeah, we want to keep these plans, affirmatively voting for them. Well, imagine the changes are going to take place then, man. Imagine all the bargaining that's going to take place. You Democrats want to maintain Social Security, you got to give up such and such. Look, I want to give Medicare the power to negotiate drug prices and make it stronger and lower your cost. Republicans kind of want to make, and Congress want to make Medicare's very existence up for vote over and over again, along with Social Security and Medicaid. Really, ask yourself, how well are we going to sleep at night knowing that every 5 years, MAGA Republicans, if they're still the Republican, this, as I said, this is not your father's Republican Party. If we're going to have to vote on whether you will have Social Security, Medicare, Medicaid, and what amounts you'll have in each of those programs. You know what they're likely to do? Use them as hostages every 5 years to get their way on other things. Think about it. Give us another tax cut for billionaires or Social Security gets it. Stop investing in clean energy, or we're gonna kiss your Medicare goodbye. It's outrageous. It's outrageous. I can't believe that the majority of Republicans buy on to Scott's plan, but that's a plan in writing, and he's in the leadership. Finally, let's do one more comparison. Let's compare our two plans when it comes to the deficit. Republicans love to attack me as a big spender, as if that's the reason why inflation's gone up. Let's compare the facts. Under my predecessor, the deficit exploded, rising every single year on the Republicans. Under my plan, we're on track to cut the federal deficit by $1.5 trillion this year. Let me say it again, $1.5 trillion by the end of this fiscal year. The biggest one-year decline in all of history for America. That's in addition to last year, we cut the budget $350 billion. The deficit, not the budget, the deficit, $350 billion. My Treasury Department is planning to pay down the national debt this quarter, which never happened under my predecessor. Not once, not once. Because unlike my predecessor, the deficit has gone down both years I've been here. That is not an abstraction. It matters. It matters to families because reducing the deficit is one of the main ways we can ease inflationary pressures. Look, the bottom line is this. Americans have a choice right now between two paths, reflecting two very different sets of values. My plan attacks inflation and grows the economy by lowering costs for working families, giving workers well-deserved raises, reducing the deficit by historic levels, and making big corporations and the very wealthiest Americans pay their fair share. The other path is the ultra MAGA plan put forward by Congressional Republicans to raise taxes on working families, lower the income of American workers, threaten sacred programs Americans count on like Social Security, Medicare, and Medicaid, and give break after break to big corporations and billionaires, just like they did the last time they were in power, when their top priority was the reckless $2 trillion tax cut, majority of that going to the very wealthiest Americans, which ballooned the deficit and not a penny of it was paid for. Look, I know you got to be frustrated. I know. I can taste it. Frustrated by high prices, by gridlock in Congress, by the time it takes to get anything done. Believe me, I understand the frustration. But the fact is, Congressional Republicans, not all of them, but the mega Republicans are counting on you to be as frustrated by the pace of progress, which they've done everything they can to slow down. that will hand power over to them and enact so they can enact their extreme agenda. Look at their agenda. We'll put up on a webpage somewhere, I think I can do this, the Scott Plan. It's in writing. We need a government focused on what families actually need. So I urge all Americans to think about the path I've laid forward. We're going to have to do more beyond what I laid forward. But then think about the Republicans in Congress are actually proposing. Which path is right for you and for your family, and quite frankly, for America? Let's build on the extraordinary process and progress we've made instead of tearing it down. Let's focus on what matters. This really matters to average Americans. I want to thank you all. God bless you, and may God protect our troops.
If you're
going to ask me about what I spoke about, I'll try to.
Mr. President, why do you believe so many Americans believe that your administration is not doing enough to combat inflation? And do you believe that you and your administration bear some measure of responsibility for the inflation that we're seeing across the
Good question.
First is we're in power. That's the first thing. And you justifiably right, we control all three branches of the government. Well, we don't really. We have 50-50 in the Senate. You need 60 votes to get major things done. I've been pushing the things I've been proposing here. You've heard me speak to today since I got in office. And I need to get 60 votes to be able to even pass them, number one. Number two, I think that, they're not focused. All they're focused on, understandably, is the problem they're facing. They get a 5.5% raise, an average raise in their salaries, and yet inflation exceeds that. And they look around the world, and they know that a lot of it's extremely complicated. And so they're frustrated, and I don't blame them. I really don't blame them. There's a lot we have to do. But you know as well, I shouldn't say you, I think what I have to do is explain in simple, straightforward language what's going on. Like, reason why 30% of the inflation last year is because automobiles cost more. Why'd they cost more? They couldn't get the computer chips to make them. People were making a lot more money. They wanted to buy the automobiles. They couldn't buy them because the cost went up so high because there were so few of them. The same way this year. The reason why prices are up. They understand, but they don't. Look, most people,
All right.
the vast majority of Americans are hoping that their government just takes care of the problem. And they don't have to think about it in detail at the kitchen table or at the dinner table. And that's understandable, no matter what their background. But right now, it's confusing. There's a war in Ukraine. And they're scratching their heads like, what the heck is Russia doing? Should we be helping? They think we should be helping the innocent Ukrainians. But what impact does that have? Do you think the average person, whether they have a PhD or they have any other job, sits and thinks, wow, there's thousands of tons of grain in elevators in Ukraine. They can't get out. And Ukraine's one of the biggest producers of corn and wheat. I wonder whether that's the reason my prices are up.
Do you take any responsibility for the inflation in this country? Do you take any responsibility for your policies?
I think our policies help, not hurt. Think about what they say.
All right. I feel like this is going to go for a while. But let's turn that off, producer Rohan. I think the bottom line here is that inflation is a killer. That's the bottom line, right? Inflation's a killer. Inflation kills presidencies. It kills households. It's a killer. For whatever it's worth, the market, while that was going on, did not respond particularly favorably. But I don't know. We probably stayed on that for a little bit too long. Our first guest has been patiently waiting this entire time. Let's bring him on. Zaheer Anwari. See what's on his mind. See how he's approaching the market right now. You ready?
Let's do it.
Zaheer.
Zaheer, how's it going?
Wait, he's on mute. You're on mute, Zaheer.
There we
No.
go.
Check the microphone on the bottom.
Yeah,
There we go.
unmuted.
There we go.
How you doing, guys?
Good. How are you?
Very good, thank you. Yeah, good to be back.
Can we just start with this? How are things over there? Like, because you're across the pond. You're in the UK. We
Correct.
just watched President Biden talk about inflation. Inflation's
Yeah.
way worse. Inflation's way worse where you are, right?
It's not any better, I'd say. You'll certainly feel it at the gas station. Filling up my car has gone up by $25. So luckily, I'm in a position where these sort of jumps in price don't affect me too much. But there'll be households out there where $25, $10, $15 increase in putting gas in your car will be a significant difference. So yeah, definitely testing times for sure.
Yeah, and I mean, I don't know. I guess how much in terms of what you're following there with what Biden's saying, but I guess it's to, I don't know. I mean, I don't know how much the policies themselves are to blame for this inflation we're seeing on any scale across the world, or if this is just what happens when you have multiple events kind of happening simultaneously that constrain supply. Right, simple supply and demand would tell us that if the quantity demanded remains the same and the quantity of supply goes down, then the price would increase. And of course, we have Russia and Ukraine putting supply constraints on wheat, like President Biden said, and then as well as COVID causing China to lock back down these supply constraints all over Asia, really. It would just make logical sense why things would go up right now. And I guess it's easy politically to point the finger and say, like, oh, look at how bad of a job so-and-so is doing. And I don't know how often this happens in Europe, but people just saying, oh, look at how bad things are. It's that person's fault. So interesting times for sure.
Yeah, absolutely. And don't forget, I mean, here in the UK, we're dealing with the repercussions of Brexit. So, there's supply chain problems all over the place. I mean, slightly random to what we're talking about, but I wanted to order some protein powder off a website that I regularly order protein from, and 2.5 kilograms of protein would cost around £25. Now that same bag of protein is over £50. It's doubled in price.
Wow. Holy cow.
So it's all over the place. There's some serious supply chain problems going on. How long it will go on for, I don't know. I mean, each time a new government comes in, whether that's here in the UK or in the US, they all seem to promise change. But, do we ever see the change? Do we ever see a difference between Labour and Conservative, which we have here, the main parties, and the Republicans and the Democrats that you have out there? They promise everything, but once they come into power, what changes? This is why I always tell people around me that the most important thing is building your own economy, making sure that you're earning a good salary, you're budgeting, you're saving, and you're investing that correctly. Because if you create your own economy to a certain extent, you can bulletproof yourself to all of these sort of outside factors, which are, beyond our control at the end of the day. So focus on what you can control, and ultimately that's investing. And if you can invest correctly and learn to find the right opportunities, then you can somewhat bulletproof yourself.
Yeah, and Zaheer, something, and I don't know kind of where you're at in terms of just overall investor sentiment right now. I mean, it seems like everywhere you turn, the next person is more bearish than the first, and people are trying to really just outdo each other in terms of predictions and how far and how quickly we can drop. Do you think we are heading toward that type of a recession?
It's interesting because these drops that we're seeing in price in the S&P and in the tech sector, particularly. We haven't seen such declines since 2008. So, are we entering a bear market? I think it's too early to tell. The correct choice, the sort of smarter choice, is to just sort of apply a little bit of patience, remain calm, remain objective, and let the market dictate rather than get caught up in opinions. I say this quite a lot in my articles. Let price dictate. You can get so much from looking at the charts. If you can understand key levels of support and resistance, for example, the S&P 500's at a major support level in the 4,000 round number, and it's kind of trading around that since yesterday. So if we see significant declines below that, then we could be entering further weakness. However, if that round number, if that holds, we could see price move back to the upside. What we do know right now is that the market's very much in this sort of sideways market, and there's no clear direction. Overall, my stance is bullish. And the reason why I say it's bullish is because the market has been bullish since 2009. And that's the direction that you generally want to be going in. However, it could quite easily turn bearish given where price is at the moment. So correct stance, stay calm, let the markets dictate, and then react accordingly. Try and avoid getting caught up in all the noise.
Yeah, and sorry, give me 1 second. I'm trying to pull up USD to, yeah, here we go. I'm going to share my screen real quick. So here's something that I think is interesting right now. Zaheer is looking at this. This is the US dollar, the euro, or if we wanted to do, what's the pound symbol?
GBP?
Yeah, USD to GBP. If we look historically, right, if I go max out here, this is in 2008. You can see we've got this spike here on the US dollar to the pound, and we're seeing another rise here. Have you been looking at this at all?
Yeah, absolutely. I mean, I focus, part of my portfolio is always to focus on currencies, and there's some wonderful opportunities to take advantage of in the currency market. I don't know if you can change that to candlesticks. Are you able to change it to candlesticks? If not, I can share my chart.
Yeah, you can go ahead. We can go ahead and share your screen. You probably have more sophisticated Forex ones than I do. I'm just using Google Finance right here.
Okay, so let me see how this works. All right, so I've got to just bring this across here.
What's interesting with the looking at the euro, it's doing the exact opposite. In 2008, it crashed the US dollar to euro, and right now it's rising. So it's interesting that in 08, the last time, the pound it was a lot stronger, it seems, than the euro.
Yeah, absolutely. I'm sharing my screen at the moment, so just wondering.
Okay.
Can you see that?
Yep, we've got them switched out.
Yeah, it's all good. Yeah, you can see my chart.
Yep.
Yeah. Okay. Fantastic. So, if you actually look at the history, I mean, this is the euro against the dollar, so it's inverted to the chart that you were showing. So you can see that if we take price action from this point here, which is 2000 all the way through to 2008, we had this huge increase in the euro, performed really, really well against a whole manner of different currencies. However, since the high of 2008, we can see that the euro has actually been decreasing quite steadily. And if you look at certainly since January of this year, which is around this high point here, we can see that the euro has declined by almost 15% since the start of the year. So the US dollar is doing really, really well. That's against the euro dollar. If I bring up the pound dollar, same thing. Oops, I had actually done an update for you guys. So my next article for Benzinga is actually on the pound dollar, hence these annotations. But you can also see the pound against the dollar. The pound has decreased by 13.5% since June of last year. So the US dollar is doing incredibly well. I mean, the high point here is all the way back in 2007. So since 2007, it's just been gaining strength. So I know people tend to sometimes look at the currency in terms of whether a country is entering a recession. And, there's a lot of factors that can go into, there's different models that people can use to determine whether we're entering a recession or not. So currency can be an indicator, but if you look at the US dollar at the moment against all the major currencies, I mean, if you go to the US dollar, Japanese yen as well, if I bring that up, you see that the US dollar, which is going back to this low point here, 2011, it's only been gaining strength. And since last month, the US dollar has gained 14% against the Japanese yen, breaking through a whole manner of resistance levels that it hadn't broken through since 2015. So, if the US is entering a recession, the currency is holding very well against all the other major currencies.
Yeah, and I wonder if that's just with the environment right now, kind of globally. We mentioned earlier just the different events happening on a geopolitical scale that might cause some supply constraint. I wonder if that's just if we're just going to see expected kind of weakness across the board, and it's not if it's okay if the U.S. If the dollar is going to be weak and so is the pound, well, the dollar is still the dollar. It's still going to be kind of seen as the global, go-to.
Yeah. I mean, it's one thing I've learned about currencies. If people are interested in currencies, it's very, very difficult to sort of use world factors, geopolitical factors to try and get an edge in the market and figure out what is going to happen next. Even with the stock market, you get so much information just looking at the charts and letting the charts dictate which direction to go in, rather than try and almost predict or outsmart the markets. It's a very, very difficult approach. So, it's important to know what's going on in the world from a knowledge point of view, from a conversation point of view, from when it comes to even understanding what best to get out of your money day to day. But when it comes to investing, it's very difficult to marry the two. And so I tend to let the charts dictate, and looking at the charts, the dollar is only gaining strength.
And that's what's the dollar's gaining strength, which is not what we typically see in times of a recession or an anticipated recession.
Absolutely.
And likewise, here's here. I have the 20 plus year Treasury bond ETF, and I'm gonna zoom out here on the max, and we can go all the way back here to 08. We saw this huge spike up, kind of when the market started crashing. The bond, I mean, this is up 31%. This ETF here in 08, and here it's going down. And again, it's the same thing where typically, if in times of a recession or an anticipated recession, you would see these bonds rising, correct?
Yeah. Exactly.
Yes.
So try making sense of that,
Try making sense of why is the bond market pricing out a recession, the Forex market pricing out a recession, and it seems like the equities market are pricing in a recession.
Exactly that. Trying to get your head around it all, that's why, in my early days when I started investing, these are the exact sort of questions I would try and ask, and then try and make sense of what's happening in the charts themselves. And I found it a really, really difficult approach, because as an investor, your primary goal is to make profit. It's not necessarily to be right, it's to make profit. And I think when people distinguish the two, you then start getting better results. So if you focus on profits, then you focus on the charts. If you focus on the charts, you let the markets dictate the direction. Now, that's easier said than done, because there's times when there is no direction in the market. Look at the S&P 500. Some people are saying bullish, some people are saying bearish, some people are saying stand aside. For me, it's very much a stand aside market. But during this period where there is no direction in the market, you've got to apply patience And that's another key skill. So all of this news is coming out. What's happening in the bond market? Why are the currency markets increasing? It's all news. It's all information. And then you have to try and translate that into profit. It's very, very difficult. But there's an expression, which is investing is simple but not easy. The best techniques are simple. And I keep on saying that. Let the markets dictate a direction. It's not easy because you've got to be consistent with that approach. So it's people always ask me about these things. What's happening in the bond market? What's happening? I was like, look, it is what it is. I can't tell you what's happening because of world factors. It's too much to know. Simple.
Yeah, I mean, like you said, I mean, this is one of those questions that you would just get. I mean, if this was a question like on an exam, right? I would probably go to the professor and say, oh, there must be a problem here. What do you mean the bond markets are going down, but the equities markets are going down too? Oh, and also the Forex markets are pricing out a recession, the Fed's rising. It's just like you would expect one of these things to be working, one of these things to be a space that'd be moving in the right direction, that would look like, okay, this could be a safe haven, this could be a place to put money right now. But it seems like all those kind of conventional wisdom things are going out the window right now. I'm seeing Easy Mike in the chat saying that kind of the equities markets is always slow, bonds get it right. So I hope that's true. I guess that's saying that people would rather buy equities right now than bonds, but it seems like they're not buying equities. I don't know. So, but
I mean,
yeah, like you.
Also,
Oh,
sorry to cut you up there. You know, also when the stock market tends to drop, you tend to see moves in gold, and gold isn't even doing anything at the moment. So it's, you know, what is happening? You know, it's.
Yeah, I mean, gold hit a high back 2 months ago and is down 6% from there. And since that time, in the last 2 months, there's been so much uncertainty, something you'd expect kind of gold to benefit from. But yeah, I mean, Zaheer, it's like you said, it's oftentimes simple but not easy, right? Looking back on it, and of course, hindsight is always 2020. But looking back on it, and here I'll pull up just the SPY, or better yet, I'll pull up the Qs to kind of illustrate my point. Right, we'll go to a 5-year outlook here. This is the bottom of COVID here. All right, let's start from before COVID hit. So where we were at before COVID, in 2 years, the NASDAQ or the Qs were up almost 70%.
Yeah.
And interest rates were at zero, and then or zero, near zero. The Fed announced around the world, some places even negative. The Fed and other central banks around the world announced they would start raising interest rates. And a lot of these growth stocks primarily, but stocks and equities across the board, took a big hit. Now that's pretty simple, Zaheer, right? I mean, you take away the interest rates, these growth stocks will benefit. You bring them back, they're going to get hit.
Yeah, exactly.
But at the time, it's simple, but it wasn't easy. I mean, not a lot of people here, nor myself, took that opportunity to say, okay, I'm gonna sell all my stocks and go short. No, it's not easy by any means, but sometimes it's simple.
Yeah, absolutely. I mean, that's why the best way to sort of exit from stocks is to have a mechanical method. You know, I use a trailing stop loss, which sort of takes away all that guesswork. And if the trailing stop loss is hit, I take my profits. And if it's hit too early because the market spiked me out, then I just wait for the next entry point. It's really easy to see things in hindsight. So you're looking here at the chart and you're saying, well, I wish I got out in January. But you'll never, when it comes to an investment, when it comes to a trend, you'll never catch the middle. You'll never catch the beginning of the trend, and you'll always give profit back at the end of a trend. It's the middle of the trend where you really want to milk and maximize your profits through holding and compounding positions. Also the other point to note is that start of the year, January, February, typically there can be corrections in the markets. If you go back historically and look at charts, January, February, and September are when they're typically corrections in the market. How deep those corrections are varies. Now, the depth of this correction that we're seeing this year is, we haven't seen a depth like this since 2008. If we ignore Corona, because that was a black swan event. So it is testing times. Whether we're in a bear market, is yet to be seen. It could just be a deep correction before a continuation.
Yeah, and I mean, I think it's tough, Zaheer. I mean, because I was just talking with David, our last guest, about this. You can't really make any specific predictions, right? I could sit up here and try to call a bottom or say we're going to drop to this point on the SPY and then we're going to bounce. But at the end of the day, I, like anyone else out there making predictions, doesn't know what's going to happen. What we can do is look at the information that we do have available to us and then allow that information to determine how much risk we want to put out there or take on right now. So if this is a time where you feel like, hey, I think things are going to get worse, I'm going to take some more risk off the table. Maybe that means going into cash, or maybe that means going into bonds, or maybe that means going into gold, whatever that looks like for you.
Yeah.
I just hope I hope risk off doesn't mean Bitcoin for you, because I do know some people like that. But
well, current cryptocurrencies as well, they have their time. Certainly not now. A market's a market. I don't think the cryptocurrency market is one to ignore. I just think, as you've mentioned, it's all about risk allocation, about capital protection. If you put all your eggs in one basket, you're leaving yourself open to, disappointment. So diversification is key. Patience is key. Investing on an edge is key. You speak to a lot of investors and they have no edge. It's all a lot of guesswork. You've got to have an edge. If you have an edge and if you can identify that edge, you can then know when to be in the markets, when to allocate risk and how much risk to allocate, and also when to stand aside, stay in cash, or potentially just sort of move to another market. If there's no edge in stocks, well, there could be an edge in currencies. There could be an edge in commodities. There could be an edge in cryptos. So you've got to be able to have an edge. That's the foundation of your decision making. If you don't have an edge, there's an expression. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. So, the one bit of advice that I would give to people is make sure that you have an edge, and one that you can repeatedly identify, simple to identify and execute on a regular basis.
I couldn't have said it better myself. Zaheer Anwari, he writes for Benzinga as well as running Sublime Trading. Zaheer, thank you for hopping on the show with us. Always a pleasure to get you on.
Brilliant. Thank you for having me. Take care, guys.
Problem.
Cheers. Bye-bye.
Bye-bye. All right, guys, that is Zaheer. I will drop his author profile in the chat here so that if you want to check out some of his articles, please do so. He mentioned he has a new one coming out about that USD to pound curve. Sorry, I'm just getting this link right now as soon as it loads. There we go. All right, guys. We are going to bring on our next guest, our good friend, Options Mike, on the show here. What up, Spencer?
What up, AB? You and I hadn't had a chance to really talk yet. We'll talk at some point today.
Yeah, we'll sometime, I'm sure.
Options Mike, you ready? Let's do it. Hey,
Spencer. AB, how are you guys?
How are things in Options Mike's world today?
Surviving.
That's all you can do. That's all you can do in this market, Mike.
Try to make a little money every day, put some money in my pocket, keep out of big trouble, and wait for better action.
How you doing that?
Quick trades in and out. Grabbed Facebook today for a very quick trade right on the open. Got in and out in a minute or so. Traded TQQQ pre-market. Took a little loss on TQQQ on that first big pop when I chased it. And practicing patience, not chasing candles for the most part, and waiting until I really like a setup. Pretty simple. Right. And it sounds simple, but you have to develop discipline in a market like this.
And that all sounds simple. So that's good. Here,
rule number one: don't blow up.
Why don't we share your screen here? All right. So this is the SPY. Wow, lots of lines. Okay, what do you see?
So, first of all, we have a lot of portions of this market that are in the bear market. There's a lot of names that are in deep corrections. The Qs are in a bear market. The IWM's in a bear market. But the SPY, believe it or not, has yet to hit a bear market. You can write this down, 384 or 383.98 if you want to be exact. That is a 20% correction in this market. And that's when the SPY hits a bear market. And what you're seeing here is as we're coming down here, and we came down and we found support last night and again today multiple times now at this 396 level that we're picking up from back in March of 2021. You can see this little flag the market made there. And we started bouncing there overnight on the futures, and we keep bouncing off of it. And we're in this big volume void. You see this here on the right side of the screen? Look at the size of this void here in the volume, right? That means
there's no buyers.
Right, there's not a lot of support. But now we're starting to come into it, and you're seeing support starting to kick back up here. These lines here are just showing we're in a channel, right? You can see this downtrend from the highs, made a lower high, and you can see here we made a series of lower lows. And by the way, this trend line right now is right down around that 384 level. Have to start wondering if that's not a magnet here for the S&P 500.
And Ninja's asking about how you define a bear market. You're going off the textbook, which is a 20% drop, which you can argue semantics. Is there a difference between 19% and 20%? No, not really.
Nope.
More or less.
But it's what Wall Street considers a bear market.
Yes.
And you have to close in a bear market, right? So, sometimes you come down, you test it intraday, and then you come right out of it. Maybe you never see it again. Just for what it's worth.
Yep. All right, so we have this clear volume void in the SPY all the way down there at what was that,
roughly
400?
385 4 area would be the next area to watch.
385 4 area. All right, that's on the SPY though. The SPY has been not the worst performer. The Nasdaq is the worst performer.
Miserable.
So wow, see, look at that. You can't even see the candles from the last 2 days, because they're overlapping with the volume indicator. I mean, there we go. There you go.
But yeah.
Oh boy, brutal. Now we are in a bear market.
We are in a bear market. We are in a correction on the tech, and there's no doubt about it. And one of the questions I keep getting, Spencer, is, can I buy here? Can I buy here? And for me personally, I'm waiting. I'm waiting for the market to say, and I'm not buying these names that are not doing good. If they're selling the names like Microsoft after a great report, and Apple and Visa and MasterCard had great reports and got sold. If they're selling all these great reports and good guidance, I certainly don't want a name right now that's losing money, because any name losing money in this market is in deep trouble. And then you want one? Peloton reported this morning. I don't even know why it's bounced. I really don't know why it's bounced, other than maybe just too many shorts in the name. But this to me is a classic name that. You look back at the .com bust, everybody talks about pets.com. Peloton. I don't see a lot of survivability for this company.
Look, yeah. So there's a difference between, how should I phrase this? Just because your idea is right and the underlying thesis of your idea is correct does not mean that the stock you're referring to can't go to zero. Pets.com, I'm sure a lot of people that were arguing for Pets.com were saying, and I wasn't really there, so I'm just guessing here, but I'm sure they were saying, the internet's not a fad. The internet's not going away. You think the internet's going to go away? You're wrong. Right. And they were right. Internet was not a fad. Internet didn't go away. But the business died. Yep. It died, right? So you can be right on the underlying thesis and just you picked the wrong stock, and it happens all the time.
I think the word I would put out there is, if you're looking to buy stuff now, and I would start nibbling, but you got to buy quality companies. If you have a company that's losing money, Palantir had a bad report yesterday, even though I like the company. Snow's losing money left and right. Who's reporting tonight? Roblex is losing money left and right. Right? These type of companies are dangerous in this environment. Peloton has to borrow $750 million at high rates now. Here's one for you. Let's go back to Carvana real quick. Nobody wants to own their debt. Look at this company. We're down to $35 a share. This was almost $380 a couple months ago. And nobody wants to buy their debt now. They're having to pay huge premiums for people to buy their debt. This is what starts to happen in a market when you see this going on, and you see interest rates going up, and investors and the big funds are now looking at everything with a much more discerning eye. For what it's worth, and I'm not really big on fundamentals, but fundamentals matter here, and you
They're
better look at it.
everything. They're
Yep.
everything. Actually, you can even argue that some fundamentals don't matter. It's really just a handful of, profitability metrics that matter. But yeah, I mean, look, who had that comment in the chat about? Wait, who said? Colby Showtime says the market will turn on a dime. That's not how it usually works, though, right? I mean, so there have been a couple of occasions where the market turned on a dime. It turned on a dime in COVID. It turned on a dime in like January. Was it January 2018 or 2019?
Yep.
2019, right? It was the end of 2018. Yeah,
We had
right.
a big turnaround.
Yep. And then we just ripped from there. So it certainly can happen.
But this is not that market. And I think to your point, you have to take a look at what's going on. So you have inflation running out of control. You have the continued war in Ukraine, which is not going anywhere. You have COVID shutting down supply chains in China. We have food problems that we're expecting now because of the war in Ukraine that's causing prices on food to go up and oil to go up, which the Fed can't fix. Earnings have been overall abysmal for, if you take the companies and all of them, put them together, really earnings haven't been good. And instead of having the Fed put there, an accommodative Fed, you have a Fed that is tightening and very aggressively tightening into this. So,
Yeah.
You need good news from somewhere. Where's it going to come from, guys? And, the big earnings names are done, right? I mean, to me, there's only 2 or 3 names that can even affect the markets this week. Names like Oxy tonight, and you have Disney this week. But all these other names, I call them tier 3 names. A SoFi, a Roblex, right? These are not names that's going to move the markets. UPST.
No. Well, the one thing potentially is CPI tomorrow at 8:30. Like, just hypothetically, let's just say CPI. The estimates are like what, 8.1%. So
Yeah,
let's just say
I actually went and got this morning because I knew it was important. Yeah, 8.5 to 8.1.
Okay, let's say it comes in at 7.
Market's going to rally briefly,
and then the question is, do those gains hold? Because we couldn't hold them last week. So that's the second question.
Look at today, right? We came into a market that was heavily oversold. One thing I always look on the SPY is how far off the 8-day moving average are we? And we were 15 handles, and we're back at 15 handles again off the moving average. When we're 10 or more, I usually look for a bounce. So we're extended off the moving averages. You had all my sentiment indicators saying that we were in a position to bounce today, but we didn't do it. We did on the futures market. We did pre-market, and they came in and just started selling the strength in this market right out of the gate, right? It's the first thing they did, sell. And, if you're looking for a change of this market, you have to see them stop selling the strength. I thought today bonds going up finally would help this market because there's been a very big correlation between the bond market and the markets and how they're moving. Well, the bonds are up 2 days in a row, but the market's not responding to it. So that's breaking down. But, you'll know this market's changed when they're not selling these pops.
Right. That'll be a sign.
Yep.
When we can actually hold on to some rallies.
Think of it this way. Last year, if you had gapped up, trapping the shorts like we did this morning, and think about everybody short the market overnight from yesterday because we closed on the lows, right? You had this big, ugly candle yesterday. A lot of everybody staying short that market, either with puts or just short the SPY or whatever they are. You gap up almost to yesterday's high, trapping every short, and now you take out yesterday's low, right? So you have this huge 5% move back down, and you let them off the hook. You go back a year ago, this market would have absolutely crucified everybody short. It would have gapped up and just kept grinding up on low volume, squeezing everybody until they had to get out. You're not seeing that action here.
You're seeing it nowhere. I saw a chart this morning of the commodities performance yesterday, like every commodity, and like palladium was green, and that was it. It was like nothing was up yesterday. So nowhere to hide. That's
because the oil prices were causing all the other commodity prices to go down.
Sure. Yeah. I mean, I'm not offering theory as to whether it's right or wrong. It just is though, and that's the summary of this market. Nowhere to hide.
And oil's taking a little bit of a hit here because yesterday the Hungary came out and refuses to sign off on the European Union phasing out Russian oil. So it got a little relief. But, I keep looking at oil saying when China reopens, eventually China's going to reopen. Demand on oil is going to go back through the roof. And where's it going to come from? Right? It's just not there.
Yeah. And then it's funny when
I don't think China has any problem buying oil from Russia.
But they can't get, it's interesting, AB, you bring that up. And I watch some people on YouTube, on some very smart guys out there, and they don't have no easy way of getting it to them. Right now, Russia's set up to send everything out through basically into Europe, out through the Baltic, out through the Black Sea, out through those areas. They have very little facilities. All their Siberian oil goes to the west. They don't have the ability to easily send it east, and it'll take years to build that up before they can do it. So that's an infrastructure problem. So yeah, you're right. They could sell it to India, into China, and other countries, but they have no easy way of getting there.
Yeah, that is a good point. I didn't know there were any other smart people on YouTube besides us three right here.
There are some very smart people. You just have to look for them.
You'll have to send me some, Mike, because I'm always looking for more people to
drop
get
me a
more
message. I'll give you a couple.
information, news, takes,
Mike,
stock tips.
Mike, in times like this, when it's risk off across the board, are you changing your playbook at all? Are you shortening your time frames? Are you doing less? Are you getting outside more?
So my long-term accounts, I have almost all in cash except for a couple positions they're doing what they're doing. I'm just not worrying about. They're all stock positions. I'm just letting them do their thing.
Let them ride.
Right, but I have tremendous cash. In my trading account, which I either swing or day trade out of, I'm doing a lot less. I'm lessening. I'm only taking trades when I really feel like I like the setup or feel comfortable. I have comfort level in it. And I'm taking profits quickly. Even if I leave a bunch of money on the table, I'm not worrying about it. I can always get back in, and I'm just trying not to chase candles. And, you watch these candles and they get these up and down candles, and they're very easy to want to chase because they're the algos. They're trying to get all retail to chase into. And they, if you watch carefully, how many times do you close on the highs on a 5-minute candle and then the following candle either gaps down or holds there and then just shoots right back down? And so you have to basically look at this and say, maybe I look at a 15-minute time frame to see what the chart looks like. You have to take your size down, and you have to say, I'm only going to trade when I really see what I want. And, I'm just trying to put money in my pocket every day, pay the bills, and wait for that time when I can really lay into something, right? When I feel comfortable, I can put a lot of risk on for the day or even for a couple of days and let it ride.
So let's go through an example of a stock that you probably wouldn't chase here, and that's Novavax. Okay, so if you're buying the dip, congratulations, it's working for you. Novavax how much is it up today from the open? It's up 23%. If you bought this thing at 9:30, you're up 23% from the open. I don't know why my chart just disappeared, but let me get that back. So anyway, buy the dip is working in Novavax, but let's zoom out on this chart. Let's zoom out. It looks horrible. Horrible. Okay? Let's not forget the reason the stock was down this morning in the first place. They still don't have a COVID vaccine. It's a year and a half later. They don't have a COVID vaccine, okay, in the U.S. You probably don't want to be chasing Novavax up 23% today from the open.
I mean, these COVID plays are all over. I mean, you look at this one. Bring up Moderna. I mean, until they have another drug, there's nothing else for them to do in this stock, in my opinion. Right?
And Moderna. Oh, let's go to a weekly.
Right? Until they have another drug, they just have their COVID vaccine. That's it. They've made all of their money on one drug, which other companies have, but you cannot sustain yourself forever on that. So Novavax, same thing.
Yeah. Again, it's like, is there a future here? Perhaps. Let's not forget what the bull thesis was for Moderna all through the last 2 years. It wasn't even the COVID vaccine. It was, the mRNA technology can be applied to other vaccines. Maybe.
Let's see it.
Right? Exactly. Let's see it. This is not the time for maybes. This is the time to buy if you're going to buy things, you want to buy companies that they know what they're doing and they have products, companies that are critical to society in some way, shape, or form. That could be a consumer staple. It could be a Google or an Nvidia, right?
Well, let's talk AMD just because you brought one up. AMD,
Yeah.
AMD. I mean, when I'm very interested in a company, I listen to the conference calls, and I would encourage all of you guys, if you own a company, to listen to the conference calls, because you learn a lot on these conference calls, how they present themselves, what they say, and some of the nuances. I mean, Lisa is probably one of the best CEOs out there right now. She's blowing it out on AMD. Great quarter, great guidance. They pivoted from cheap PCs, recognizing that the trend was changing, to high-end luxury chips that are killing it for them, into the data center and into the cloud. Yet the stock is down, right? But to your point, if you really want to buy a company, you're looking for a name like an AMD. I'm not saying buy AMD, please. The Mike said buy AMD. I'm saying a name like this, who is not going anywhere, who's well managed and on the right path.
Wait, sorry, I'm just taking notes. Mike said buy AMD on margin. You said
on margin. Yes,
that's what he said.
Yeah, and by the way, I stay the hell off margin, people.
Yeah.
I have one quick thought on kind of the semi stocks right now. Well, it's really, I think, more of a thought on.
Is it a semi thought or a full thought?
It's a full thought.
Okay.
I should say it's more reflective of the crypto industry. I would say that the semi industry would then be kind of a not a beneficiary, but the opposite of that. They would be hurt by that.
I can't think of the word. But okay,
go beneficiary. I don't know.
Go for it.
But essentially, I don't know if you guys would agree with this, but I feel like I've seen kind of a sentiment shift in like the general public, maybe not with crypto at large, specifically NFTs, I would say, whereas like a year ago, someone would be talking about NFTs. If someone didn't know what they were, it'd be like, oh, like what is this? I want to learn more about it. Or it was pretty neutral, whatever. Now it seems like I'm seeing more and more people on Twitter, like people that aren't on financial Twitter, seemingly more annoyed with NFTs. And like I'm seeing tweets like, oh, I'm blocking the next person I see try to sell me an NFT, all this stuff.
I've never gotten it. I never understood the fascination with owning a digital piece that anybody else can use and have.
You want to know? Anyone want to guess about how many NFT email pitches Benzinga gets a day?
Oh my god!
I'm sure
it's in the dozens. It's several dozen a day.
Well, and that was my first kind of like, yeah, I'm staying away from this, was when I realized kind of just how big the supply was and ever growing. It's like, how could, and that's why, like, to be fair, really the only, to my knowledge, the only two of the only projects that have held up have been the Bored Ape Yacht Club and CryptoPunks, because I guess to some degree there is some limited supply there. But that's just NFTs, and I think overall crypto is becoming less, like Bitcoin as an investment isn't as sexy as it once was, because it's $30,000 a Bitcoin. If I buy it right now, even if it goes to $1 million a coin, that's only like what, 20x return?
Only 20x? Is that what you just said?
Well, I'm saying the reason that people
sign me up.
Okay,
where do I sign?
I'm saying that people that have loved crypto and have gotten into it is because they hear these stories of people buying a coin for $1,000 and then they have Lamborghinis and all this.
Yeah,
that's not really the case with Bitcoin anymore. I mean,
well, I don't think that's the case necessarily, because I think Bitcoin can go up quite a bit. I think what you're looking at here is that it got itself tied to the markets. Everybody's like, it's a hedge against inflation.
Not.
It's not, right? You have a lot of big whales. The one I keep hearing now is they're trying to crash it below 21,000. So Michael Saylor has to get margin called, and his company MSTR gets margin called, and they have to sell. And I think to myself, and I'm not a crypto guy, so please, but he's been one of the biggest proponents of Bitcoin and crypto. Why would you want to publicly make him get liquidated? Because that would look so bad for everybody else in that. He is one of the big whales in that. So when I see people saying that, I'm like, that makes no sense to me, because if you take him out, it's like you're taking out one of the biggest proponents of crypto. Why would you want to do that?
Well, yeah, I mean, I think that's a legitimate fear out there for some right now. You know, if that happens, what does that cause? Where does Bitcoin drop from there from 21? And I think back to my point and kind of relating to the semis is I think for the past couple, at least for the past year or so, there's been this kind of implicit understanding that there will be a demand for, you know, Nvidia will sell X amount of chips for crypto miners, and so will AMD. But if the price for Bitcoin and Ethereum keep falling and that demand for those chips decreases, now we all know that these chips are in everything. AMD and Nvidia will be fine, but could it be a short-term headwind if the crypto market loses a bunch of miners and producers that they don't want to come in and buy those chips anymore? Sure, it could be a potential short-term headwind. I think that's all, but just something to keep an eye out for semi stocks.
I mean, I think it's potential is short term. I think both Nvidia and AMD have backed off on their guidance. Well, at least AMD did for the cryptos and stuff like that, and they keep it as a separate, smaller piece of their business. Listen, AMD is, you know, they have their video. So first of all, AMD has their investor analyst day coming up on June 9th, where they're probably going to announce new products and video cards. And Lisa alluded to on the call, this is why you listen to the calls, that they're going to be trying to ramp up to take on NVIDIA in the graphics space again. Now, they're still this number 2 in the game, but they're trying to get it to close that gap some more. So that could be a very interesting announcement on June 9th. So, you know, put that down on your calendar as something you need to listen to. But I don't think anybody really worries about the crypto effect on them anymore. Not like we did a couple of years ago in the last crash, right? The last time Bitcoin came down, they had so much of their revenue coming from selling to them. I don't think it's as big of a piece of it anymore. So maybe a little bit of a blip, a ding, but I don't think anything like it used to.
When you say last crash, are you going all the way back to like 2017?
Right, when Bitcoin came crashing back into the single down to 3K. Remember after that big pop and it came in? And
I know, when it came all the way back to 60.
I remember that because I wasn't really, I was like invested and I followed like the big news of the stock market, but I wasn't like trading like I was now. So I mean, that makes sense back then, 5 years ago. You know, Nvidia and AMD would be even more dependent on the cryptocurrency because now more and more things use these semiconductor, right? Every single car has one, every single refrigerator has, you know, so it's and I also
every single car has multiple chips.
Right. Like not the mechanism,
just the one.
The mechanism in your car that like moves your seat up and back and forth has a, you know, but, and this is my fault for not listening to the call, but I also didn't realize that AMD kept their kept its crypto segment separate. So I think that's good.
I listened to the call, and the sense that I got was that while mostly good, a lot of that positivity was due to the Xilinx acquisition. Was the sense that I got, and that without Xilinx, which is a moot point because they own Xilinx, so it is that's
why they bought them. Because they wanted to get into more of that. They wanted to get better into that space. Right. So they recognized the weakness and they went into it. Yes.
Yeah. By the way, if anyone was listening to the AMC call last night with us, I've never heard this before on an earnings call. The call had gone about an hour long, and they hadn't done any Q&A from analysts yet.
What were they talking about?
Well, they answer questions from like the retail investors first, right? So we're like an hour into this thing, and Adam Aaron's like, all right, we've been at this for an hour. We probably have time for like 1 or 2 questions from. I assume he was referring to analysts, but I don't actually know because he didn't specify. But he was like, let's do like 1 or 2 more questions, and then there was like an awkward beat, and then the call operator, all these calls have these operators on it. The call operator goes, all right, that's all the time we have for today. Adam Aaron's gonna end it with some closing remarks, and then there's another awkward pause, and then Adam Aaron goes, all right, I guess that's all we've got time for. They got booted off their own call. It's pretty funny.
It's kind of amazing. Then you have SoFi, which I'm guessing decided to release earnings early today because
no, they didn't decide that. I think it just leaked, which happens.
It was on their website.
But I think it's still not trading.
It's not. It's been halted for news now for hours, and I don't know if they're going to hold it now till the close and wait for the conference call.
They might just hold it till 4:00.
I mean, imagine if you're in this today and you said, "Okay, I have puts on it or calls, and I'll close them before the end of the day." Brutal.
Yeah, I mean, SoFi. This is one that looks like it's on its way to zero.
They're not a bad company. They're being hurt right now by the student loan forgiveness extension till September 1st. That's a big part of their business that they're not collecting interest rates on. So, they guided down for the next quarter. They guided up for the year, but I'm going to guess that guiding up is based on that will actually let college students start repaying loans in September, and they won't again push this out for another 3 months.
Well, so here's the thing. I'm looking at the Pro right now. I'm seeing the SoFi headlines, right? So, they reported positive EBITDA, positive adjusted EBITDA for, I'm sorry, that's their guidance. That's
Yes.
their guidance. And then they raised their sales guidance for the year.
Right. The
And-
lower quarter coming up.
Lowered it for the quarter, raised it for the year because, like Mike said, they're waiting on the moratorium to end whenever that happens. But at a certain point, I mean, you guys know, I'm going to say this as a SoFi shareholder, but like, what is the market cap of SoFi right now? It's it's still high. Oh, these companies went public at such crazy valuations. Is it a zero? I don't think so, but could it keep going lower? Probably.
Well, it's like Palantir, and that's my bag holder. I own that thing
Yep.
at 28, and I'm getting brutalized in it. That's going to be my tax write-off this year at this point. So you're not alone. Now, I don't think that company's going away.
Yeah.
Translation, they're not going to just disappear because they're a solid company, but they're not growing at the rate they need to
No.
offset what's going on, and they're just making little to no money. So that's
Yeah.
a problem.
All right, we got to hop. We've been live with Options Mike. Options Mike, always a pleasure, man. Have a great rest of your week.
Thanks, guys. Have a good one. Enjoy.
Mike, stay green.
You too.
All right. So yesterday, Aaron, you were not here. We were having a little bit of a debate, a healthy debate.
Okay.
On the show in the chat about leverage ETFs, right? And I forget who the commenter was. I asked them to come back today though, because they made a comment that they had seen some research that it is actually helpful to own leverage ETFs longer term. And I said, I don't want to argue this with you. Come back tomorrow because we're going to bring on Dave Mazza.
Wait, the person in the chat yesterday was arguing it's
Yeah,
a smart idea to own.
they said they saw some research, and I was like, I don't want to argue this with you.
Okay.
Come back tomorrow, because I'm going to have Dave Mazza from Direxion here, who can address that. So here he is, Dave Mazza, head of product at Direxion. Dave Mazza, how are we doing today?
Doing well. What's happening, guys?
All right. I want to start with like a FAQ type of thing here because we were getting this question yesterday in the chat. As I just said, we were having a bit of a debate about leverage ETFs. I was talking about what you and I have discussed previously, which is like how to use them, how long to hold them. And we were looking at some ProShares funds, but the same logic applies to ProShares as applies to Direxion, which is they both use leverage. So explain again why it's not a great idea for somebody to want to own, let's just say, a 2 or 3 times bullish ETF if they're just uber bullish for the long term.
Okay. Well, first and foremost, it's important to remember, and folks who've heard me on the show a few times are saying, "Wow, this guy's a broken record,"
Yep.
but they're daily investment vehicles. So what I specifically mean by that is that the returns, whether it's 2 times, 3 times, on the upside or downside, so the bull or bear fund, happens on a daily basis. So that is paramount to understand. Now, what that means for using them, for trading them, is that you can own them for more than a day. You just have
Yep.
to have the ability to make a buy, sell, or hold decision daily. If you don't have the ability to do that, if you don't want to do that, if you don't care to do that, I'm happy to tell folks, stay away.
Yep.
It's not going to be the right tool for you. But what ends up, and the reason why we overemphasize that is because when you're in an environment like this market, and this is the paramount market to understand it, is that when you have big up days and big down days, your return, your 2 times or 3 times return, will be far different than what the index return would be, meaning the 1 beta return of choosing the ETF or the index as the underlier, as a proxy, than it would be. But people would then point to historical periods where sort of like the period we were before November of this year, where you can own, if you're bullish on an area and you own a bull fund, yeah, the returns are unbelievable. But
Yep.
you can't predict the volatility environment. That's the challenge.
Yes. If we knew the future, and if I knew, for example, that the NASDAQ was going to go up or down at a pretty consistent clip for the next 2 years, then sure. But I don't know that.
Correct.
So it defeats the purpose. Dave, I also want to ask you about this news, this regulatory news we got out of FINRA. FINRA was taking comments, or soliciting public comments on a proposal that would, as I understand it, limit access to, I think, what they called complex funds, which includes leverage ETFs, ETNs. It would limit access to those to only accredited investors in some way, shape, or form. Now, the comment period's over now. I think it ended yesterday. But what is Direxion's take on that?
Sure. Yeah. So this is important to emphasize. This was a comment period. So there was a proposal set out for public comment, and so folks can voice their opinion of whether in this particular case there was a question about the availability and understanding of complex products, and that included a wide range of products, from commodities to leverage loans to leverage and inverse, and many things in between. And in our opinion, and as we noted in our comment, we believe an educated investor and trader is what's most important. So we want to focus on education. I think, as one of the reasons why we come on to talk to you all and your listeners is for that education. Why, as you do a great job of noting the amount of resources, whether it's the quiz we have on our website or other areas, to learn about these products. And then separately, various brokerages, and we work with them and encourage them, have warning labels that someone's going to enter this space, that they need to be comfortable with an aggressive type allocation and the volatility that can come with these products. So, we encourage folks to voice that, because at the end of the day, we believe an educated client, an educated customer is going to be the best one for us.
Yeah, I would imagine a lot of the onus, obviously most of the onus does fall on the individual to know what you're buying, but also on the broker to, just like with options, right? It's not open to everyone necessarily, right? You should maybe perhaps have to show or prove some level of basic competence that you understand this stuff before buying it. But so now what happens, just from a standpoint of this question?
Well, the comment period is over. Time will tell what happens next.
Okay.
So I can't speculate or speak to that. But again,
Cool.
At the end of the day, in what we've done for years, what we're going to do in the meantime is continue to hopefully educate folks on how to use these products, when not to use them, what they actually do, how they behave, and particularly because we're now in a period of pretty healthy volatility, which isn't comfortable to trade in, but that's the reality we find ourselves in. And these tools can be powerful for someone trading on a daily basis, but you can also get yourself in trouble if you're not focused and using them appropriately. Which is, I think, the question about availability is a fair one, but if as opposed to not allowing access, we want to promote education.
That brings me to my main point here, which was, what are you seeing out there? Last time we spoke, yes, we've been going down now for 4 or 5 weeks in a row, but it does seem like things have really picked up in the last couple of days, especially maybe since Thursday. So what are you seeing in your stable of leverage funds on the flow side, on the volume side? Last week we spoke about some ETFs that are doing very well right now. What are you just seeing as far as activity, though?
Yeah, a couple things here, and I think we teased this out a little bit last week. This has been it's a difficult trading environment. S&P 500 down 5 straight weeks last week. Coming to Monday, that yesterday felt like a pretty good flush out. Today it's kind of tougher to hold bids in some cases, but at the end of the day, what we're seeing in our leverage and inverse suite, certainly bull funds have had pretty difficult performance, but trading volumes, particularly starting last Thursday, Friday into yesterday, picked up sharply. So that to me is a good sign, right? If we see an environment that traders step back, there's selling and there's retrenchment, just going to cash. That to me would be a broader sign of real capitulation. And some people are calling for that, right? You need all these 90% down days and a full flush out, fear and panic on the streets. This is difficult, but actually somewhat orderly. We'll see if that continues to be the case. And it's really been concentrated in names with particular high multiples. We are still seeing, as noted, a lot of interest in Soxel. And that trade has been a difficult trade, but on the down days, we see people trying to time that to buy that dip, step in, and see if we can get a bit of a recovery.
Interesting.
And we saw some of that. So that to me is rather interesting. We've also seen SOX S pick up in trading volume. That's the bear fund. So Soxel is the daily bull fund, SOX S the daily bear fund. Now its volume much smaller, but we have seen a bit of a pickup in the last couple of days, but nothing like we're still seeing on the bull side. So
and just to be clear, for people looking at this chart, being like, what the heck is going on there? That's a reverse split, right, Dave?
Correct. Yeah. So good.
Okay.
Yeah. So thanks for noting that. So
yep.
that is when we had our reverse split because the share price was kind of dipping down.
So SOX X didn't actually go from $3 to
Correct.
$35 on one day. Chart says it did, but it didn't. It didn't. So okay. Wow. All right. So we're seeing still ample desire for people to position. I'm much more interested in SOX L because that's the bullish fund. Ample desire to bet on a bullish turnaround in semis. Interesting. And look, and the volume supports that. Yeah. Wow.
Yeah. So what that means, I'll jump in here. What that means is that what we calculate something which is a ratio of trading volume to assets. And that means the implied holding period. So how much turnover is happening? And what we've seen as volatility has increased, the turnover has jumped, meaning the holding periods are getting shorter. That's how these products should be used, meaning someone shouldn't be buying the dip and then owning it again, because that's been a difficult trade. If you want to step in, try to time the dip, get that up day, take your gains, step away. Trade, these are trading tools. So that gives me, tells me that the market sentiment remains healthy, even if there's a big overhang of these macro concerns.
Yeah. Would you expect in like let's just say hypothetically the market really continues to collapse here and the pace of the sell-off really picks up. In that scenario, would you expect liquidity or volume in direction products to dry up or to accelerate under that scenario?
So that's difficult to say with great clarity. But what I do know is that if we look, because what the most dangerous words are this time is different, right? But history tells us that during periods of volatility, and I'm going to separate the COVID crash for a minute. But if we think about the fourth quarter of 2018, when there was concerns about rate rising, that we forgot about that. That was a really bad December, really bad quarter, and then you got a nice bounce back, really for into 2019, and then barring 2020. If we go back even further to things like the sovereign debt crises, and that was like rolling issues 2011, 2013, taper tantrum. These products did it. We did see rotation of what traders were interested in, but there wasn't a broad-based retrenchment where everyone just went to cash, at least in our suite, because we offer these trading tools. I will be quite honest. If we end up, if tomorrow's CPI, many people are now calling for, inflation had peaked. If that's not the case, and if it looks like the Fed's credibility is getting lost again, then I think we're in for some more pain here, because earnings have been better than expected, but they, as I think I noted before, they weren't lights out enough to get people forgetting about all the economic issues.
Yeah, that's true. The earnings have beat, but nobody cares about that. Dave Mazza is the head of product at Direxion. Dave, it is always a pleasure. I'll have you back on again next week.
Thank you. We'll talk soon.
All right. I want to address this comment in the chat real fast. I just scroll up to find it from Dire Archpriest. The U.S. market is a Ken Griffin and bank fraud ring. Don't invest in U.S. markets. They don't even buy your shares. They hold them at Citadel Connect to price fix stocks and send sells to the New York Stock Exchange. Dire Archpriest, then what are you going to do is my question to you.
Well, wait, hold on. But before we get to that, is it not all brokerages? Don't some places you actually own the shares of the company? Or not really anymore.
No. I think what he's referring to is the DTCC, which is the clearing corporation that actually holds and transfers the shares. Similar to like if you have money in the bank and your bank account says you have $100,000, you don't actually have. The bank doesn't have $100,000 of your money on them right at that moment, right? It's the same idea. Now you can register your shares and you can quote unquote do the equivalent of taking them offline or whatever. But I think that's what he's referring to here. But Dire Archpriest, there's only 5 things that you can do with your money. You can spend it, you can save it, you can 4 things: spend it, save it, give it away, or invest it. That's it. And the bottom line is, for most people, investing is the easiest way to get rich, to build wealth. Okay? Not everyone is going to win the lottery. Not everyone is going to become an entrepreneur and build a great, successful business or inherit all this money. Okay? For most of us, investing is it. That's how we retire. That's how we retire. It's how average people. That's why, I always think of Wall Street as not just the big banks. It's all the freaking teachers of America that have retirement and pension funds, right? Wall Street's everybody.
Police officers.
Yes. So Dire Archpriest, what are you gonna do?
Well, that's the thing.
I hope you're able to retire one day, seriously, because that comment, I don't even care about the conspiracy stuff. But just the comment about don't invest in U.S. markets. Then what?
Well, I think there is some, and this probably comes from a lot of people who maybe not grew up, but were young during the 2008 Great Recession and everything. This kind of bad taste in their mouth for Wall Street. You have the Occupy Wall Street movement.
I get it.
And I hear that sentiment a lot, actually, of people that just think the whole Wall Street's all a scam, rigged, whatever. And almost that they kind of in the back of their head, maybe even in the front of their head, are kind of rooting for the whole system to collapse. And that's the only thing that I say to those people is keep in mind that if you are in that camp, kind of I want to see that whole system burn down, whatever, that there are people, there's a 55-year-old police officer planning to retire tomorrow that if the stock market crashes today is going to be unable to do so and is working for 10 more years. Is that fair? No. Should the system be set up that way? I don't think so, but that's what we have, and that's where the majority of our retirements are into the market, at least to some degree.
Yep.
The different pensions throughout the country that hold billions of dollars of wealth. So
no, and people are saying I-bonds. The problem with I-bonds is
you can only buy so much.
Yeah, that's one problem. You can only buy $10,000 a year. The other problem is that their yield is tied to inflation.
Right.
So if inflation goes down, so are your I-bonds. They're going down with it. It's adjustable.
This was the best year ever, and will probably be the best year in our lifetimes. I hope so. Knock on wood.
Oh, we should be so lucky
to own I-bonds. And at max, you made $1,000, right? You bought 10,000. Inflation went up I don't even think it ever went up 10% at one point, but
And you got to own them for a year too.
and you got to own them
So-
for a year, so,
so-
it could go up that high, but then come back down to 5%. So let's say on the high end, inflation ends the year at what, 8%?
Sure,
Would be on the way high end.
sure. That's where it is now. That's what they say at least.
Yeah, but they said it's coming down from here. So okay, either way, 8%. You make $800 off a 10 grand investment.
Yeah.
That I mean,
Yeah. So okay.
that's great. Like that's better than a lot of other people are gonna do because a lot of other people are gonna lose money. But still, it's you're not gonna get rich off I bonds.
Now's a great time to buy I bonds, but the point was like you can't put all your money in I bonds.
I mean, I don't think now is a great time to buy I bonds. Right now, well, right when they're saying that they think inflation's gonna start heading down.
Well, you do get that rate, the 9.6% rate for the next. What is it? Is it 6 months or 3 months?
Okay.
It's not super variable,
Oh,
but it will change. But the comment about like don't invest in the U.S. Man, where else you gonna go? Okay, have you seen the rest of the world? The U.S. market has crushed the rest of the world over the last like 15 years. Like destroyed it. It's not even a contest. Like here, let's pull up this super broad chart. This thing that I own. Okay, I own this VEU. It's the Vanguard FTSE All World ex-US ETF. So this owns conceivably every stock in the world outside of the US. All right, look at this thing. Look at the dog that this thing is. If you bought this thing in July 2008, June 2008, you're flat on a price basis, not on a total return basis. But
I'm curious if there's a because I was doing some reading last night, and it seems like a lot of with everything going on in China right now, right?
Yeah.
And I mentioned this earlier. There are just some macro headwinds right now that were not anticipated, right? If you asked most people 6 months ago, they would have said, okay, we're through the brunt of it when it comes to, maybe not 6 months ago, maybe 3 months ago. We're through the brunt of it when it comes to supply chain issues, or specifically from COVID throughout the world, like COVID lockdowns. We didn't know China was going to get fully locked down.
No.
I was reading about it. Apparently a lot of some kind of like final stage manufacturing is essentially like the assembly of goods and stuff have already started coming out of China into some other
that's good to
places in Asia, whether that's the
Good.
Taiwan,
Vietnam,
Taiwan, Philippines, you name it.
Good.
Is there a way to invest in like the emerging Asian markets that excluding China?
Sure there
Really?
are. Oh, of course.
Cool.
Well, let's go. Let's go find one right now.
An Asian ETF ex China.
All right, I'm gonna use this.
Honestly, I kind of want some China exposure here too right now because people are just so bearish, and I think there's literally no way things are worse there a year from now.
All right, so let's find one. This is going to be free publicity for this website that I pay for.
Cool.
ETFDB.com.
And the SPY is really making a move right here. Wow.
Really? That's
Yeah.
fun. All right, this is a screener. You want an equity ETF, and you want an ETF that is you want like emerging Asia, right?
Yeah.
Okay. Let's go look. Oh, emerging Asia Pacific. Look at that.
And honestly, that's what I think. Like, one of the reasons I kind of do want to get some exposure to China here too. And in addition to this, I think I want some without China. It's just because everyone is like.
And you specifically don't want China exposure, right? That's what you said.
Yeah, but now Kevin N in the chat and I are talking about China could be a good move from here. See, that's what I'm saying, Marco Polo. Part of the reason I'm kind of like it is because everyone is so bearish on it.
All right, so here we have 102 emerging Asia Pacific ETFs. Let's just sort by return. Let's just take a look at the return year to date. Oh, we have to get rid of the leverage. 1 second. Let's cut the leverage out of here. We don't care about, again, these are for investments, so we don't care about leverage funds for purposes of this exercise. Gets us down to 91. All right, what do we got here? Top performers this year is a Direxion China A shares ETF. That's interesting. No, this uses leverage. See, these are inverse funds that use leverage, so we don't want that. All right. We have an Indonesia ETF. We have 2 Indonesia ETFs. Oh, what's this one? Southeast Asia ETF, Global X. Let's take a look at ASEA. Let's see what's in that guy. The holdings are. This is basically what I do for fun some nights. Look at the profile of this thing, ASEA. I'm on a different tab now, so I apologize that you guys can't see that. Why won't you load for me? Sorry, guys, it's not. Page is being very slow. Well, while I load this page, what's happening out there in the market? Are we really rallying or what?
Yeah, we're still rallying. The S&P 500 is up now, about 0.7%, above that 400 level. To give you guys some context, so about an hour ago, we were 395 on the SPY, 401 now. So nice little $6 move in the last hour. We shall see. I mean, I said it earlier today. We got that rip, and today was the same story as it's been. More of the same. You know, sell those rips. Do not get baited into them. So is that what's going on here? Is this a rally to sell? Is it something to just ignore? Is it something to keep our eye on? I don't know.
All right, wait, real fast. So this ASEA fund that we just randomly selected from the screen.
ASEA, I see what they did. Asia.
ASEA, it's got no China exposure. That's not true. Every company in the world has exposure to China in some way, shape, or form.
True.
But it doesn't hold any stocks that are domiciled in China.
Okay.
You got Singapore, Thailand, Indonesia, Malaysia, the Philippines, and then there's, I assume that's cash there, the 0.1%. That's probably cash. So this is a nice, broad, diversified Asian ETF. With that doesn't include China. So maybe consider that. But again, obviously do your own DD. There's more to it than just the holdings. You got to look at the underlyings of the market. You got to look at the currency when you're doing emerging market stuff. You got to look at the fee of the fund. A lot more to consider. But ASEA, if you are looking for like a broad Asian basket of stocks that doesn't include China, could be one worth considering. I think that put a bow on the conversation we were having before, which is like, if you don't want to invest, don't invest, okay? But good luck funding your own retirement, because for the rest of us, that's how we're going to do it. Yeah. And I'm sorry. I really am sorry that people like have this like conspiratorial view of investing. You can think the market is rigged and still invest. That's okay. The stock market goes higher more often than not. That's what history tells us. And I know that past performance does not equal future results, but past performance is kind of all we have to go off of, right? That's all we've got is history. We don't know the future, obviously. So don't invest at your own risk. That's all I'll say, okay? If your time horizon is long enough and you're investing in not in like crazy moonshot stocks like Peloton, then you'll probably, not definitely, but probably be okay. It works. Compounding is a freaking miracle. All right, I'm off my high horse now. I apologize. So how are we doing out there? I think it's really ripping. Everyone seems to be talking about this.
Yeah, I mean it.
Yeah. Wow. Oh, yeah.
Like
look at that. Look at that cues. We're getting the 330 ramp, but at 145. Yeah, and Hurt Scrambler, I hope they learned a valuable lesson about diversification and not putting all your money on red. Not putting all your money on one stock. Okay? That's probably the worst thing that could come of this, is people just get poisoned on the idea of investing. And they miss out for the rest of their lives, which sucks, frankly. So, meanwhile, dare I say the Qs are threatening to go green, or is that too soon?
Go green.
I mean from the open. Sorry. Yeah. We're green. We're green from yesterday. I was talking about from the open though, because we opened at, what did we open at? 304.
304.
304.50. We're a buck off that right now.
Yeah, a little less than a buck.
We can do it. Let's go to my watch list here.
Tomorrow, I mean, I don't think. So what the CPI came in last month at?
It was like 8.5 or something like that.
And they said this month 8.1 to 8.5.
Yep.
I don't think they would estimate on the low, I don't think they would estimate that it would decrease from month over month unless they were like 100% sure. Because that'd be really bad. If they were estimating a decrease, then we got a surprise like increase. Like it was 8.8.
It means the estimates are out to lunch. That's what that means. Right?
Yeah.
And everyone who's giving me the now do Japan argument, yes, that's why nothing in life is guaranteed. I'm not saying you're guaranteed to make money if you invest. I'm saying you're guaranteed not to make money if you don't invest. Damn. Anyway, by the way, Japan did come back. It took 20 years. But Japan did come back.
Well, also...
Oh, wait, no, it hasn't. I lied. It still hasn't come back from... What's the all-time high? 1989 was the... All right. I lied. Hasn't... All right. So if you bought Japan stocks in 1988, 89, yeah, you're underwater. That sucks. And that's why you diversify. Jeez Louise. All right. I know I'm getting frustrated. I'm a little bit congested. Maybe that's why I'm feeling frustrated, as I'm just congested before we go to Vegas, which I'm not happy about. Speaking of Vegas, you're on the late night flight tomorrow? Or no? Thursday. Are you going on Thursday? All right. I'm heading out tomorrow night.
Really?
Yeah.
Hell yeah.
I get an extra night there to lose all my money.
There you go.
Gonna be fun. If you're gonna be in Vegas on Thursday, Friday, or Saturday, come swing by the Aria Hotel Resort and Casino for the FinTwit 2022 conference. It's gonna be freaking awesome.
Oh my God, we're making another move.
Yeah? Tell me more.
I think we're right at that open price on the Qs.
Tell me more. Let me get my chart up. Where's my chart?
This is crazy. I will say if this bear market is to continue, these rallies that we'll see will be vicious. Like,
oh yeah, they're gonna rip your face off.
In the past, we talked about this before. Like 10 out of the top 20 days for NASDAQ were like during the .com bubble crash.
Yep.
And now things are just so much faster. We have more algo trading, higher volume in general. So if back then it was a 5% rally on the NASDAQ, I mean, it could be like an 8% this time. So I'm expecting if we do keep crashing, I think I'm generally more bullish right now than most people out there. I think I've kind of made my case in point today. I think it's very clear looking at the Forex markets, looking at the bond markets, that people really aren't pricing in a recession. And that's essentially what, 20% plus drawdown in SPY. Like you only see that really during recessionary times. So I am bullish. You've got all these things going on in China, Russia, Ukraine. It'd be very hard for me to imagine, specifically about China. And the fact that, we still have so much production in factories locked down there. It would be very hard for me to believe there's not some improvement in that regard in the next 6 to 12 months that will then help ease some supply chains, that could bring down some prices. And maybe gas isn't $4.30 6 months. And I could be wrong. I could certainly be wrong. I hope I'm not. I hope I'm not wrong and gas isn't $5.50. But basically my point is, if I am wrong and the markets do continue going down from here, we will see kind of crazy rallies.
Those are going to be great, aren't they?
And they're going to be basically, now I'm saying in 2022 they're going to be even crazier than they were in 2000 or in 08. They're going to be
epic. They're going to be so epic.
Yeah.
Oh my God. We're going to see the market
we can see like the Qs like up like 5% one day.
Oh, I said 5. You said 12.
We already saw the Qs up 5%
all right, you're all right. You win.
I don't know. I mean, we can look at NASDAQ best days all the time.
I thought I was going crazy with 5. Here he is going 12 next to me. Staying corrected. Oh, man.
Best one-day return, NASDAQ.
I mean, last Wednesday was pretty epic, wasn't it?
Yeah.
Wasn't last Wednesday pretty epic? Thursday wasn't so hot though. That's how it goes, right? There's a new book out that I want to read. It's called Just Keep Buying.
Have you finished Big Short yet?
No, I'm almost done. I've got like 30 pages left. I thought I was going to read it on the plane. I ended up watching Inception for the 30th time.
It's a good movie.
I know. I can't help myself. That's a movie that I'll watch just always. I don't care how many times.
I'll admit I've watched it a few times. I still don't really get it, but
you don't have to. You gotta appreciate it. Hey, you know what we haven't done is taking a quick look at crypto. How are we doing today in crypto land?
I'm gonna guess not great, but probably better in the last few minutes.
Let's find out.
Yeah, Bitcoin moving higher.
Let's find out. All right. Well, no surprise here. Luna is getting lost down. Yeah, that is not
What does it say it's down?
40%.
Yeah.
This is some serious wealth destruction.
And the market cap is, what does it say? About 10 billion. It was like 50 billion.
I thought I saw 40, but you saw 50?
40. You're right.
40 billion, and now it's 11.
So 30 billion wiped out of the crypto market.
Dear Lord, man. This is what scares the crap out of me with crypto investing, honestly. Because you guys know I own that, I own Bitcoin, I own ETH, and I own Solana. But I don't actually understand this stuff.
Well, we know that.
So it could the good news is if that happens, I won't, lose all my money because I don't own that much of this. But the bad news is I'll lose half the money I have. It's terrifying, man. I hope, look, I'm not rooting for anyone to lose money here. So I hope that Terra can turn around and that they can save the project or whatever. I don't know, man. It's just, there's probably going to be more of these, right? There's probably going to be more blow-ups. That's what happens in an unregulated market.
Yeah.
It happens in a regulated market too. That's what happens in markets. Things blow up. Yeah, I know. We talked about that earlier, Brian. UST lost its peg to the dollar. If you have a peg to the dollar that loses its peg, then what even is the point?
Yeah, and I think that's the biggest thing too here. It's bigger than Luna. I think it's going to be the sentiment saying, okay, oh wow, even a stable coin isn't stable in crypto.
That defeats the purpose.
Right.
Oh gosh. Anyway, if you don't care about this stuff, you want to just keep buying, just keep buying, just keep buying. I recommend buying through Voyager using the code ZING on your way in. Create an account, use that code, fund it, make a trade, and they'll send you $50 in free BTC. And hey, if you do have a long-term time horizon, then you should be thinking, yeah, I get Bitcoin at a cheaper price now than I could a month ago. That's always fun. Aaron, yesterday I asked informal survey in the chat. How far, at what price would you back up the truck in Bitcoin?
By back up the truck, you mean
just go load up. And I said I didn't have one. I said I thought 18 to 20 seemed like a reasonable thing, but I don't really have one because theoretically, because if we got to 18, I'd be like, hell no, I don't want to buy that now.
Yeah.
But
I don't really have a lot of I feel like a lot of people we talk to are I'm mostly cash right now.
You're fully invested?
Yeah.
Way to be. Way to be.
But I would sell some of my other holdings to buy Bitcoin if it got below
10.
I was gonna say 5. And I don't even know then because it's like what
Dude,
you're
you
saying.
don't
If
know.
It got down there, I'd be like, "There's no chance in hell I'm selling my Apple to buy Bitcoin." Also, speaking of Apple and Bitcoin, has Apple never made any announcement or gotten involved in crypto any way whatsoever? Because I know there was a lot of people speculating that they have all this cash on their balance sheet. They should just buy some Bitcoin.
I don't know if they've done that. Yeah, that's a good point. The largest tech company in the world hasn't bought Bitcoin?
Yeah, well, and I was thinking about that too, because it's Apple. I don't really know what Apple does outside of like, where's Apple spending all their money in R&D? Like, is it literally just to make their iPhone like camera a tiny bit better than next? Like, it seems like Apple could be allocating some of its resources.
You mean to like a car?
Maybe, but a little bit better, or maybe something like we already have electric cars and smart cars. Like maybe something like actually revolutionary again, like it did when it came out with the MacBook.
But do we have an iCar? No.
No, but I'm saying for them to be just putting millions and millions of dollars in their R&D into making like incremental improvements into their technology, to me isn't that exciting as an investor.
Yeah, I'm pretty pissed off at Apple right now because all their products seem to last exactly 1 year. And then
Okay, wait, hold on, I'm translating. Aaron T says he has a cousin's friend's girlfriend who is a product manager at Apple.
is it actually what he said? Cousin's friend's girlfriend? All right, a friend from home.
What he always does when he ever texts us.
Your friend wants to know. Your friend wants to know how you're using the Apple ecosystem. Okay. All right.
Yeah. And that's like what we were talking about the other day. So basically Aaron's point was that they're trying to figure out like holistically the Apple's product ecosystem, how they all interact with each other. And I think we were talking about this, Aaron, the other day. I was talking about my AirPods. I lost them. Well, I found them, but I lost them before I found them.
Wait, to tell people where they were found.
In the men's bathroom at work.
Yep.
In like
Public restroom,
yeah,
by the
not
way.
like a Benzinga bathroom. Like
Just a public restroom.
Yeah. But I was talking about buying some like a different brand of Bluetooth headphones. Like, oh, maybe I'll buy some like JBL or Bose earbuds. I think it was Rohan was like, you might find one with better sound quality, but as far as like usability, like you just open the thing and it pops up on your phone. Like it's like the AirPods are just so easy. And I feel like that's really what Apple's become. It's just like, hey, our shit's more convenient than yours. So people are going to spend more for it because they're lazy.
That's the truth.
But and what I was going to say too with crypto is like, I trust Apple's judgment, and I guess I'm criticizing because I don't really know. Like, and I haven't really looked into it. They're probably very hush-hush about it too, what projects they're working on. But I assume Apple had people look into crypto as a whole and say like, hey,
Yeah, I presume so.
should we get into this? How could we get into it? Should we invest in it? You know, we have all this, and decided not to. And that's, to me, kind of telling. The biggest tech company in the world that has the ability right now to take on risk, whether that means risk in investment, risk in R&D, and said, not really for us.
Yeah, it's telling. Theoretically, they know what they're doing.
Theoretically, I'd hope so. As an investor.
We are all investors because we all own SPY. That's not true, but most of us.
I mean, most people that own any equities own some
It's true.
shares. So, some. I mean, even Dow, right?
Oh, you mean the Dow?
Can you not own the Dow? Can you not trade it? Is there an index?
You can,
own?
DIA.
Oh.
But it's not. Apple's not on the Dow.
Microsoft is, right? Are you sure?
Yeah, I'm sure. Right?
Positive?
Yeah. The Dow is Microsoft's in the Dow.
Okay, maybe I just assumed Apple was because Microsoft was.
Come
No,
on.
you're right. I trust you.
Yeah. I don't think.
Goldman Sachs is in there.
Yeah, it's a lot of like.
A lot of finance, a lot of energy.
Yeah, a lot of industrial stuff.
All right, guys. Well, it is 1:58. You know what that means. Unfortunately, it is time for us to wrap up the show for today. But I had a good time. It was good to be back. Good to be back in the office. Good to be back with Spencer.
I missed you, man. Wait, Apple is in the Dow.
See?
I stand corrected. Why did I think it wasn't?
I don't know.
That's why Google is doing their split, right?
To get in the Dow?
Theoretically. Why else would they do it? The Dow's a price index. So the higher your price, the more weight you are in the index. So
the Dow wouldn't bring them in because they would be too big of a price.
yeah, it's $1,000 stock.
It would throw off the
Right, it'd throw everything off.
Oh, that's why like the biggest weighting, like you have like United Health in there.
Yep. Exactly.
We did that. We talked about this the other day. But yeah, guys, fun show today. A lot going on in the markets. We know it's a tough time out there, so it's more imperative than ever to stay informed, stay up to date, know what's going on, and know kind of. Here's the biggest thing: if you hear anyone telling you this is exactly what's going to happen, and they act like they know the bottom or they know how far we're going to drop, they don't know. So just keep your eyes, ears open. Tomorrow will be a big day.
Tomorrow's going to be our last show of the week, so we're going to do some trivia.
With CPI. Wait, I'm not doing a show on Thursday?
No, we're not going to be here. Oh, unless you want to do it by yourself?
I'm gonna.
No,
be
wait,
here.
you're not going to be here.
I'm flying out Thursday night.
Thursday night?
Yes.
Why so late?
I don't know.
You got the good end because you don't have to set up.
We've been over this.
Oh, we have. All right.
All right.
Smash the like. See you guys later. Hopefully, we're green. How do we end the show?